All right. Hello, everybody. Welcome back to another episode of the Market Close. Today is a big one. We are here kicking off big tech earnings, Mag 7. Got Tesla and Google. Folks, this is going to be a pretty important day. You got the S&P 500 that is hitting all-time highs as of basically 20 minutes ago. 6350 is what we got on the S&P 500. And in order to maintain that basically 7-year multiple high that we're getting 22 times versus 18 times average, we need to get the biggest companies in the world to execute. And in the way to get them to execute is really for them to put up the numbers. As you can see right here, S&P 500, 633. Some of the biggest companies in the world, Tesla and Google today, will be showing off if they have the ability to show the numbers that the street thinks are necessary to ultimately get some momentum. For the next 30 minutes, we will be going through what we've got on Tesla, what we've got on Google. At around 4:05, we will get the results. Then at 4:30, we will start Google's call. That call will be done by 5:30. And then by 5:30, we will immediately go into Tesla. So the first, call it 25 minutes from 4 to 4:25 are going to be kind of wild. I'm going to be trying to getting all the numbers I can to get the results, all the headlines that we're going to be seeing. We already have some headlines going into both of these names that pretty much came out over the past 20 minutes. And so we'll be discussing that and going further from there. To break this all down, the reason I keep saying we is because I've got someone to join me. I'm live on his channel as well. So hello to Jose's audience. Jose, what's up?
Hey, how's it going, man? How's it going to the community? Pretty excited for big tech earnings to finally start back up, especially like you mentioned, we got some interesting news just in the past hour or so. Today, we got some interesting stuff as well. And yesterday, I mean, we saw some massive announcements of just AI investment in theory. So it's a pretty fun time to be an AI investor.
This is a big one. We got Tesla, we got Google. I think we're all really excited. Jose, correct me if I'm wrong. You own both of these names, right?
Yes, I would say my Google position is a lot more important to my portfolio than the Tesla is. So I'm definitely I'm rooting for both, but I'm really rooting for Google today.
Got it. Yes, I own both as well. And so these comments are great, guys. Yes, I know what I'm wearing. Okay, I want to have some fun. Okay, Jose, he's treating it like a typical New Jersey summer day. My AC is working again, so no, I'm not burning up. But I wanted to have some fun. One of you guys said Indian Jones. That is hilarious. That one. That's the best one I've seen so far. That's the best one I've seen so far. All right, let's get into it. We got a lot of questions. Jose, I want to get your raw thoughts. Let's start off with the Googs. What are you expecting on these earnings? I will pull up the earnings expectations in terms of what Wall Street wants, but what do you think is going to happen?
Yeah, so for me, my biggest concern here is going to be kind of the cloud space. We did kind of hear reports that OpenAI is now using Google Cloud Service. Are they going to announce anything about that during the earnings call? We do know that the cloud market is still more supply constraint versus demand constraint. Is this going to create maybe a reason for Alphabet to maybe increase capital expenditure, which could be very bullish for companies like NVIDIA, like Broadcom, which they use a lot of their AI chips? So my main overall look is going to be on the cloud service. Then obviously I want to understand any updates on AI overviews of their AI solutions. I used to be a 100% OpenAI bull in forms of their models. That's the only model I was using. I'm saying now I'm doing 50-50 with Gemini and with OpenAI. Luckily for me, I'm able to kind of write them off. I do have both of the top tiers. So I'm paying $200 a month for both. And
wow,
both of them are
that sounds like a guy who invested in NVIDIA pretty early. $200 a month for both? That's a car payment, bro. That's $400 a month.
It is. It's insane. But like, I mean, I use AI on a daily basis, nonstop, and it helps me for a lot of the things that I do. But it's pretty impressive how Gemini has come from this Bard 2 years ago, which kind of sucked, to now being. I think if you look at the betting platforms, many expect it to be the top model by the end of this year. So I'm very excited to see what we're seeing in their AI innovation. As a YouTuber as well, I am seeing the ad business is still pretty strong. I haven't seen any hiccups on forms of my ad revenue side. And usually if I do, it might be a small indication of some worries. But right now, I don't see any worries at all in forms of ad or search revenue.
Cool. I agree with a lot of what you're saying. I made a quick little list right here, both on Google and Tesla. So we'll look at that in a second. Real quick, George, thank you for the 10 gifted memberships. Really appreciate you, George. Thank you for being here. And thank you for spreading some of the blessings with the community with these 10 gifted subs. And Invisible, I think this is for you, Jose. You got this.
Yeah, he wants me to send him the digits, it seems, of my email to my channel. So
Okay.
Invisible, I'll post that later.
Yeah, and also if you want to get in contact with Jose, he's active on Twitter, so you can DM him as well, and he should be able to get in contact with you. Okay, so
Actually, that's great. Yeah,
that would be the best way to get in contact with both of us. Here's a little bit of a cheat sheet. We'll talk about Tesla in a second, but I just wrote this up. This is what I'm looking for when it comes to Google. Number one is GCP operating margins, which I believe inflected. Maybe not, I'm exactly correct on this, but I think 34% last quarter. So really, you saw some incredible operating margin velocity from Google over the past year. Year over year, I think that's up about 5%. AI subscription revenue, if they show it, they did introduce that new AI Ultra package of $200 a month that includes a ton of different things along with YouTube Premium. I wonder if they're going to segment that out. I kind of think they won't, but if they do, that would be really nice to see in terms of how fast that's growing. Third of all is search growth. So the street's expecting 8%. Let me say that again. The street is expecting 8%. Some of the more bullish analysts like a Morgan Stanley and Oppenheimer or JP Morgan, they came out over the past couple of days and they said, you know what? We think they'll do 11. Last year was 13.4. They're definitely not doing 13.4. If they do 13.4, this thing's going to like 250. I'm being hyperbolic. But if they match the year-over-year growth, because they haven't done that for 6 quarters, that would be, just a monster quarter. They're probably not going to do that. But if they get above 8%, closer to that 10, 11%, I think the street will be really happy. So that's a big thing I'm looking for. Number 4 is AI overviews, DAUs. I've been using it every day on stream. I'm becoming a literal daily active user of AI overviews. I don't know if they're making money on me on that, but it's definitely a product that's growing. So I think that's going to be very important. And then Gemini MAUs, I think the last number we got was like 400 million. If that can get to like 500, 550 million, I think that's going to be important. And then finally, YouTube growth. They don't really tell us that much about YouTube outside of its revenue growth. I think it'll be consistent. And as long as those 5 things, in my opinion, are sustainable in terms of going into Q2, then we should see some upwards momentum on Google. Jose, do you think there is a AI overhang in terms of Google not being seen as an AI company, which is why they're getting discounted so heavily in the Mag 7 in terms of their multiple?
I think so. I think you have all this fear that you have all these I think because Google doesn't make as much noise, right? We heard OpenAI saying, look, we're going to expand this massive investment with Oracle. You even hear Elon with his XAI kind of talking about the same thing. I feel like Google is just quietly just destroying doing its thing. And maybe that's why right now the market is saying if you're not talking the big game, it probably means you don't have the big game. But I think there's some fear that this is going to lose in the AI space. Regardless, I like you mentioned, you're using a daily basis. I'm using it on the daily basis. They tricked me to get into that Ultra subscription. And
that's 200 a month, right? The Ultra.
Yeah, that's I think it's like 2 something right now. They have for the first 3 months. They have it at like 125.
Okay.
But I'm pretty sure I'm going to keep it. I'm trying to find what are going to be the few models that I stay with that I'm willing to pay the price. Right now, Gemini and OpenAI are definitely it. But I want to say, even with this AI search weakness, you still, if there is a thing, you're still going to see this massive demand for AI compute, which would bode well for their cloud business. And I think that's what I think Google Cloud is the most undervalued play out of all the cloud server providers. There's massive valuations on AWS. There's massive valuations in Azure. I think if you kind of look at the valuation metrics of just Google Cloud itself, is probably one of the lowest. And I don't think that's fair. I think this is one that has a lot of benefits from them designing their own ASIC solutions to being big partners of companies like NVIDIA.
I agree. And I think the reason Google's been getting a discount compared to the Mag 7 is primarily based on that reason, that the street doesn't see them growing as fast as AWS or Azure when it comes to cloud growth. And then they see them insulated or not insulated to the risks of AI with 10 blue links being taken away. Meta doesn't have to deal with that because a social network's different than a search engine. And you put those two together along with the fact that some of their other bets are doing well, but they're not like super profitable, aka Waymo. It just doesn't get a premium. And I think Sundar has to create confidence in a lot of people that Google is an AI play. By the way, the one thing I think it's important to understand, by the way, I put the Google pump and dump link or poll in the chat. I'll turn that to Tesla in a couple minutes, but you guys can vote on Google pump or dump. This stock is up 30% in the past month. So if there's a world in which they underperform against expectations, we absolutely could see a dump on this thing because it's up. It's made its move, right? People expect a move going into earnings. If the earnings aren't perfect, it could dump. Someone did buy $20 million worth of calls yesterday for strike price 210, expiration 919. Now, maybe they're using that to hedge. Maybe they're using that because they're actually that bullish. But we do have a lot of people that are betting on Google. The question is, can they ultimately execute? Matt says, Amit, I got my friend Ian in the chat for the first time. Can you give him a shout out? Ian, shout out to you. Shout out to Matt having you here. And shout out to everyone who is watching our preview of these earnings. 79% of you say pump. So obviously the crowd is bullish on Google. And the question is just going to be, can they execute against that bullishness? Yeah, they're up 14% in the past month, 30% from the lows is what I meant to say. So 14% in the past month, 30% from that 150 level. But still, I mean, it has indeed made its move. All right, Tesla. Jose, we got a lot of breaking news on Tesla just today. I want to get your quick thoughts, but we just saw this like 40 minutes ago. Tesla and Nevada, which I'm probably saying wrong. Some people say Nevada. Looks like robotaxis are coming to the States. Here's the question. Do you think the numbers are going to be good? And if the numbers aren't good, do you think qualitatively Elon will be able to get people to be excited about Tesla?
Yeah, I mean, in forms of vehicles, I don't think the numbers are going to be good. But I think if you are an AI investor, a Tesla investor, you're okay with that. You know that the real growth story is what's happening with the AI trajectory, what's happening with robotaxis. We got obviously that bullish news today, like you mentioned, on the robotaxis in Nevada, whatever. I'm pretty sure I said it the same way twice, even though in my mind I thought it was different. That's what I think you want to hear more about AI robotaxis. What do you see? Has your timeline shifted of when you expect to kind of expand? We saw the expansion in Austin pretty quickly after the initial rollout. Is that going to continue? So unfortunately, I think most of the Wall Street big players are going to be looking at these numbers. But I think as a true Tesla investor, you're looking for the AI story and what's happening there. And also kind of that the quiet story of the energy market. I mean, are they seeing growth there? How has that changed with kind of any of the new regulations that have been in place in forms of some of their energy solutions? What is the commentary on that? Because we already know that kind of their power solutions was pretty strong, and we've seen Elon use their Megapacks in their data centers because it's crucial with these massive GPUs. You see this vast fluctuation in power. And something like the energy solutions that they have can help kind of create a stability there. And xAI is using them nonstop on their platforms. Is that kind of a massive tailwind in the future? Are these kind of Stargate projects also going to start to implement stuff like this into their solutions? What can they tell us about maybe that portion of the AI story that we don't really hear too much about?
I agree. I think the numbers are going to suck. If the numbers don't suck, maybe the expectations being that the numbers are going to suck is what creates the rally, right? Because it goes against expectations. But if the numbers do suck, which I think we all know it's just not going to be the best, then the question becomes, what can Elon get people excited about? And there's three things: autonomy, robotics, or as you said, Jose, compute, data infrastructure, and their plans to be able to scale that to get Tesla to continue to have the differentiated moat it has when it comes to autonomy. I think Elon, and this is me anecdotally speaking, I see a lot of his tweets. I've been reading his tweets for the past couple of days. Everything is about Tesla, SpaceX, and Neuralink. And it seems like he's back to business. It seems like he's not going to be as political. Now, maybe he does become political randomly. He wakes up. But I think the reason the stock fell to 275 originally last month was because of the Epstein stuff. And then it fell to 288 again because he said he's starting the America Party. It's been 2 weeks. There's no mention of the America Party. And so maybe Elon is getting back to Tesla stuff, which is what ultimately investors care about. Here is Dan Ives. He was just on about 10 minutes ago talking about what he thinks the Tesla story will look like and what he expects from Elon and what investors are expecting from Elon on the call today.
He's taking some fire.
Yeah.
Can they get past that?
I mean, I believe, look, it's a key earnings call. And as everyone's a key earnings call, but this is a dramatically different 3 months when you compare back to April. I mean, now you have robotaxis, which our team saw front and center in terms of launching. The key on the call is when the other cities going to come on in terms of robotaxi. I think you're going to have 25, 30 cities over the next year. When I talk about wartime CEO, is that this is a recommitted Musk. and he recognizes this is an AI arms race.
Yeah, but when he made the announcement about the new political party,
Yep.
you questioned as to whether this was a recommitted Musk. So what makes you change from then to now?
Yeah, and obviously he didn't like that we suggested that. And my view is that I think he started to read the room. If you look since that moment, you've really seen him shy away from, I think, a lot of politics. And I think Musk recognizes now this is the window. This next 3 to 6 months, especially going into the November board meeting where I believe they will take a significant stake in XAI, he recognizes that this is the time for him to lead. And I think that's what you're going to see on this conference call tonight, even though deliveries and obviously near term continues to be a work in progress.
What if there's nothing that he can do to win back the business and the customers that he's alienating?
Mm-hmm.
You ever worry about that?
Look, I mean, of course, we've worried about and we've talked about some of the brand issues, but I believe it's our view this is a $2 trillion market cap. $1 trillion of that is going to be autonomous. And when you think about robotics and Optimus and what I view as the future, I view that as relatively breadcrumbs relative to where I view the market cap of Tesla over the coming years. Because I think in physical AI, the two best plays, Godfather of AI, Jensen, NVIDIA, and Tesla.
The two best AI plays of anything.
The two best physical AI plays.
NVIDIA and Tesla.
I think in my view, it's not even a question over the next few years. And if there was a third, it would be Palantir, the Messi of AI.
All right. Thank you.
All right. That's what you got from Mr. Dan Ives. Jose will be back in a sec. In terms of what the stock market is doing as we get into the end of the day, we got about 12 minutes until we get earnings. Palantir right here, 154. The reason I think Palantir is getting a move is because Trump is at an AI summit right now with the Olin podcast. Dan Ives just put out a note. You just heard him talk about Palantir. He put out a note from Wedbush saying we think Palantir, Microsoft, NVIDIA, and Palantir are going to be some of the main winners along with Tesla when it comes to this AI revolution. So maybe Palantir is getting a little bit of a bid from that. I don't think there's anything like fundamental, any news that came out or anything, but that AI sentiment at that DC conference is what's getting the market excited. Palantir right here up 3%. HIMS, incredible day, 17%. My bet here is that Wall Street Bets is looking for companies that are shorted and they're blowing them up. HIMS is 38% short. And so it might be blowing up based on that. S&P 500 up almost a little bit towards 0.75% right here, 633. This is at all-time highs. So it's very nice to see the S&P 500 gets all-time highs before Tesla and Google. And if they can just give us some good numbers, then that could solidify that as well. Google right here at 190 and then Tesla right here at 332. Real quick, before we get back to some of the coverage, just to cover this news, because it did break literally 5 minutes before we went live. Wall Street Journal reported that the DOJ told Trump that his name was in the Epstein files. And I read the article right before going live. The article didn't say Trump was doing anything inappropriate. It's just that the DOJ told Trump that his name was in the files. Well, the White House responded literally a couple minutes after the article came out and said this is unequivocally false. So you've got that narrative going on as we begin to analyze some of the big tech earnings that are coming in as well. Jose, Optimus, do you think we get any update at all from Elon this quarter?
I don't know. I think what we might just hear maybe that long-term thesis. I know there were some reports that I think it was about a month ago that maybe the production that they were expected to do this year, I think it was 1,000, the number. I forget what was the actual number, but I think it's supposed to be a little bit smaller because of some of the supply changes and some of the mechanical things that they were working out. So maybe just an update to that. I would say as an investor, I would like them to make all the changes right now and have lower numbers this year as they fix everything else to make the production even faster throughout the other years when it really matters. So to this year, still kind of like that research and development phase, and I'm pretty sure it's going to continue, but at least some update in that. Maybe we did see that kind of Grok is being implemented now into Teslas. Have you gotten the update yet on your vehicle? Have you tried it? I don't think I've seen it on mine just yet, but we'd love to see that integration also and what they're going to do with it a little bit more.
Yeah, I've not got that update yet, but and you didn't either. But that to me is very bullish, and it also warrants probably an investment into XAI. Do you think he's going to speak about that at all, or he's going to leave that for the November meeting?
I've been thinking about it. Why hasn't he invested? And I was actually talking to our good friend Neil, Couch Investor, a few days ago about it. And the only thing I can think about is XAI maybe doesn't want to be invested on by like a big company like Tesla, if they want to maybe provide that solution to all types of automakers. We've seen a lot of companies, when one player invests heavily, it kind of pushes potential customers to kind of not want to try that product or use that product. So I wonder if Elon unfortunately has to think both as a Tesla CEO and also a kind of like a XAI mentor or whatever. I forget what position, if he's the actual CEO there, but I wonder if for XAI, it makes more sense for you not to have one car company invest in you, because it might kind of push away other car companies from using your product. So that's the only logical thinking, but I don't know if logical thinking makes sense at this point.
Yeah, and one argument is that he's using XAI as a bargaining chip to get the pay package. So I think that's fair. I think that's probably the reason why they didn't invest in XAI at a $18 billion valuation back in June of 2024. Jose, you're deep in the semiconductor space. This is something Elon said yesterday. We're going to have 230,000 GPUs in Colossus 1. Then at Colossus 2, we're going to have 550,000. He also said we want 50 million H1 equivalent level of chips live in the next 5 years. Sam Altman says we want 100, or not 100, but a million. 100 million. He said we have 1 million GPUs. He says we need to 100x that to 100 million GPUs. I mean, what is your take just in general on all this AI compute that is being spent? And does that have any implications for Tesla and Google today?
I wouldn't say for Tesla, the only real thing I can see is maybe kind of just an increase in capital expenditure to whatever. But I think they're already, Tesla has mentioned that they are already kind of happy with their compute. I don't think we're going to see much capital expenditure there. So nothing too much for Tesla. I think for Google, it kind of showcases if OpenAI is making these types of investments, if XAI is making these types of investments. I wouldn't be shocked if they did increase their capital expenditure today in forms of earnings. It's not something I'm expecting, but if they do it, I wouldn't be shocked. So I wouldn't be shocked there. The overall thesis, you don't have to take those numbers to true value, but the overall thought process from all these big players is we don't have enough compute. That's the easiest non-true value that you can come up with, is you don't have enough compute. This is bullish for the whole AI infrastructure, obviously NVIDIA being the top player, but it trickles down to your secondary players, your ASIC players, your power solutions, your infrastructure players. So the AI compute is bullish for cloud players like Google Cloud. So that gets me excited about the overall thesis for Google and kind of seeing some numbers on Google Cloud today.
Agreed. So again, in about 10 minutes, we will have earnings. At 4 p.m., we'll have the close, probably at 4:05. Google usually tends to be even quicker. Google by like 4:02, you get the numbers. Tesla, I think, is around 4:05, 4:10. And then the call for Google starts at 4:30. And then the call for Tesla starts at 5:30. So we will try to give as much analysis as we can before the call. I know during the call, people like to listen. And so we're going to just play the call. We'll be in the chat, Jose and I, trying to break down some of the numbers as well. But it will be 2 calls back to back as we try to break down some of these numbers. Speaking of AI and all this compute, Trump is in DC giving a speech, a keynote address at the AI Summit. Here are some details on what that AI Summit is consisting of and what it means for the future of compute build out in the United States.
Also lower the market for migrant labor coming into the United States. Another point that he made was very critical of Silicon Valley firms using the term BS, but not using the phrase BS to describe the position of Silicon Valley companies who are laying off American workers, not hiring American STEM graduates out of American colleges, and at the same time applying to the administration for more H-1B visas for foreign workers to come into this country. He said that argument is BS, although, as I say, he didn't use the phrase BS. And then we're expecting to hear a little bit more from the president this afternoon on this new AI agenda. Take a look at some of the items that we've been briefed on so far today that are included in this 28-page document the administration released today. They want to partner with industry to deliver AI export packages overseas. That is, so that American AI is the future of the industry. They also want to do a lot here around data center permits and removing federal regulations. This is largely about environmental regulations that they feel are slowing down the growth of the physical plants of the AI industry. And then also they're talking about DEI. They don't want to see DEI built in to AI. They say they don't want any sort of political ideologies in the software. Scott, back over to you.
All right, amen.
So we'll get more details on what's going on with the AI action plan. But the fact that this president is really embracing the investments that are needed to build out data centers and compute across the country, I would imagine, Jose, you think that's broadly bullish for the AI names.
Oh, definitely. I mean, one of the things they talk about is kind of reducing kind of the friction of opening up some of these data centers and getting kind of the electricity and power infrastructure for it. And it kind of reminded me of something else. I'm going to be interested of listening during the earnings call. The big, beautiful bill, right, passed and all that. And one of the things within there was the ability to write off your AI servers on year one. And that can kind of 100%. And that can obviously, if you're able to write off a big tax chunk on year one, you're able to reduce your tax bill dramatically. And in theory, you have now more money that you can use to buy even more AI servers. So I would love to hear if Google Cloud somehow talks about that, if there's an analyst that discusses that, as normally they kind of break it off in about a 4 to 6 years, depending on what company does it. Doing it all in 1 year, you're getting kind of that same thing, but now you're able to free up the free cash flow a little bit faster to kind of invest a little bit more. So that's something that I don't think many people are going to be listening to, but I hope there's a question about it.
Agreed. I agree. I think it is a massive decade of investment that we are heading into. And it's wild because we get to invest in that. So we got 3 minutes until this market closes. Thank you, everybody, for being here. For those that are here for the first time to an earnings call, welcome for being here. These tend to be fun. We treat it as our sport. We get to do this 4 times a year. And it is always important, in my opinion, if you're going to be investing in companies, to care about the earnings that they're putting up. It's not the end all be all. Some companies have good quarters, some companies have bad quarters. But as a active investor, you want to know what the company is doing. And as a community, we get to come together and see candlesticks go up and down, see if we make money, lose money. That's always fun. So very excited that everyone is here today. Jose, final question to you. Everyone in the chat, 80% of you said pump on Google. Only 53% of you say pump on Tesla. So most of you say it's going to be a little bit more of a dump on Tesla versus Google. Jose, Google, pump or dump? What do you think?
I'm saying pump on Google, but I'm hoping for a dump so I can buy more shares. But I think it's a pump. For Tesla, I think I'm gonna go with the sentiment as well. Maybe a little bit more bearish on Tesla for this earnings, right? Not for the overall long term, but for this earnings, I'm a little bit more bearish on Tesla.
Okay, so dump on Tesla for you, pump on Google. I'm giving the people what they want. I'm saying pump Google and pump Tessie. Pump Google, pump Tessie. Everyone's happy. Everyone should be happy. No, in general, I do think both can pump. But if I'm wrong, I'm wrong. And regardless, it's 1 quarter in a long journey to cover these companies. And hopefully we get some results that, will make everybody happy. All right, folks, here we go. We got 30 seconds left. If you're new to the channel, we ring a bell when the channel closes. Or not when the channel closes. I don't know if the channel's ever going to close. Hopefully the channel's open forever. When the bell closes, that doesn't make any sense either. See, this is earnings get you fired up and you can't talk, but that's not a good excuse because I can't talk every single day if you're an OG of the channel. When the market closes, we ring the bell and then we wait with anxiety to see if our net worth goes up or down. Thank you, everybody, for being here. Wednesday, July 23rd. 4 p.m. Ladies and gentlemen, we got Tesla and
close
Google.
That bell.
The stock market is now closed. And now we wait. So, Jose, how's the weather?
Pretty good, not too bad. I mean, hopefully we have some cool earnings coming out. I don't know what else is happening today.
Yeah, I don't know what else is happening. I'm in Jersey too, so I know it's pretty hot, but we are going to try to see what happens. All right, before we get into Tesla and Google, Palantir closes the day 154.63, up about 3.73%. Not too bad. S&P, wow, she got a 634 close, guys. She hit 634 right at the bell. It was at 633.50 for the majority of the past hour. 634 all-time high. NVIDIA back to 170.78. You got Oklo, that's up about 9%. Nano Nuclear was up 7.8%. Again, Palantir 154. BMNR, a little bit of a sucky day for some of the Ethereum treasuries. Bitcoin right here, 118. Ethereum as well, I think closed under 3,600. 35.96, just there at 3,600. Coinbase right here below 400. You got Circle right here, 202. That's up 2%. SoFi was up 2.7. Not too bad. Robinhood, again, rough past couple days, but still Robinhood holding above 100. 102 is what you have on Hoodie. Big Bear AI, that was up 7%. S&P again up half or up almost 1%. Open Door Door kind of closed today, down about 20%. DNUT, another meme stock, that one was up 4.6. That one also came down from up 40%. GoPro was also up 40%. That one's only up 12.4%. And then Kohl's, which was up 40% yesterday, ended down 15% on the day. So some of that momentum coming out of the meme stocks. Hims, great day, up about 16%. Upstart right here, up 5%. Enphase, also crappy day, down about 14%. All right, Tesla and Google. Tesla and Google, in about a couple minutes, we should be getting the results on Tesla and Google. Let me know in the chat if you bought Tesla, sold Tesla, bought Google, sold Google, put some covered calls on the position, bought some puts, sold some puts. We're going to be getting these results any second, and then we are going to see how they react. I do think Google will be coming out before Tesla, and then we will get a better understanding of what we got. Rocket Lab, yup, got that close at $49, which has been really good for Rocket Lab. Got to 53 last week, now up 4.8% on the day. They were informed that they might be one of the key contractors or vendors for the Golden Dome. So that's another reason why Rocket Lab's been getting some momentum. Google, we got a green candle. We got a green candle. Now we got to wait until I think at least you're at 4 or 5% to see if it's legit. A lot of times this ends up reversing very quickly as the street is trying to figure out the earnings. I know Jose is looking for some of the numbers. You guys can be looking.
Yeah, looking here.
Yeah, Jose will let us know once he finds them. I'm looking for the top line numbers. Oh, we also have T-Mobile earnings. Okay, so T-Mobile beat by 6% on EPS, beat by 1% on revenue. EPS is up 14% year-over-year. Revenue's up 7%. T-Mobile, ticker symbol TMUS, that is up 4%. Nice to see. The communication providers having a good earnings. T-Mobile also has a deal with SpaceX, which is and Starlink, which is good. So T-Mobile right there up 4%. Google's losing that 2%. It's now 1.1 barely. Looking for the numbers. They should be coming in any second.
Yeah,
and then we should
Stock
get
Market News Twitter account has it.
He has it. Okay, let me go to him.
Yeah.
All right, here we
did beat
go.
all around.
Okay, Google, we got a beat and a beat. We got a beat and a beat. 231 versus 216. That's a beat on EPS. Revenue 96.4 versus 93.7. That's a beat on revenue. You got a beat and a beat.
Yeah, it seems cloud revenue did really good as well. 3.6 when the market was about 13.1. So nice Google Cloud growth there. And overall, some exciting numbers.
Okay, I would say these are good numbers. I don't know how exciting they are. I mean,
good numbers are exciting.
No, 100%. They're exciting, but I don't know if it's pumped to 200 type of exciting. So I mean, this is not the 40% beat they had on EPS last time, that thanks to SpaceX. But I mean, Google's going red right here. It could flip any second and go up 5% if it wants. Good numbers. You could say great numbers. I don't know if it's enough to get the street excited.
I think here what we're going to have to wait in the earnings call is to tell us a little bit more about that Google Cloud revenue. They did mention that there's still supply constraint. Is that still the thing happening this earnings? Are they still supply constraint? And if they build more AI servers, will that be able to continue the overall cloud growth? So like you mentioned, maybe not great numbers for a pump, but as a long-term investor, it kind of continues to give you that bullish thesis that, look, things are okay. No, this AI carnage on demand on ad is not really here.
100%. If you're a long-term investor, these numbers look phenomenal. If you are looking for a short-term pump after it's up 30% in the past 2 months, it might not give you that. Google now tanking 2.4. I say tanking lightly because this could switch. I think a real tank would be near that 4 or 5%, but 2% is whatever. That's okay. Tesla numbers not out yet. We're still waiting for those, but Google down 2%. I am trying to get search revenue and see exactly how much that grew. Tesla, little green candle, but nothing too crazy. If anyone has the specifics on search revenue, that is something I would want to see. Okay, I think we have it, or I think we have some coverage. Let me pull this up. Yeah, here we go. All right, let's see. And we'll go to Tesla as soon as we get those numbers as well.
In bottom line numbers for Q2 revenue, it's coming in at $96.4 billion. That is a beat. The analyst consensus was $93.9 billion. On the bottom line, second quarter EPS was $2.31. That's also a beat. The market was looking for $2.18. We've also got another key figure, which is cloud revenue that landed above analyst expectations, coming in at $13.62 billion versus the $13.1 billion analyst consensus. I'm going to keep digging through these numbers and I'll come.
All right, so those are the numbers. They did 54.1 billion. I'm trying to figure out, is that what year-over-year percentage growth that is, because that'll also tell us a lot about what's going on with Google. Tesla moving a little bit after hours. No numbers yet. We should be getting it very soon. Google down
I sent you the
2.5.
press release for Google, but revenue was up. We see Google Cloud Service revenue was up 12%, which includes kind of their ad business. Their Google Cloud was up 32%. Which is much better. I think last quarter they did like high 20s. So it grew into the 30s. It's back in that low 30s there for Google Cloud.
I think, dude, they increased their CapEx. Okay, so hold on. But do you know what their CapEx is for 2025? What's the last number?
75 billion, I think.
Exactly. They raised it to 85, folks. Wow. We are increasing our investment in CapEx to 8. That's why NVIDIA and Broadcom are pumping. I mean, even if Google
we said it at the beginning. We said it that it wouldn't be shocking if we saw that CapEx grow.
Yeah, even if Google's down, that is really good for NVIDIA and Broadcom. Services up 12%, cloud revenues 32%. That's their fastest growing. Overall revenues 14%. I don't have the exact search percentage year over year. I will try to find that because that one is very, very important. Oh, I have it right here. I can do the quick math. So 54.1 minus 48.5. That is growing 11.5%. That's not bad. That's not bad. Dude, they got almost 12% search revenue. Last year, that was 13%. That is only 1% below. Google should be up on that, dude. Google should be. That is a great number on search. Tesla, no numbers yet, but Tesla's up a little bit.
Yeah, I mean, as a long-term investor, again, this is great. You see that the ad search isn't dying because of any form of AI. You're seeing Google Cloud growing at massive levels. I think Street was expecting closer to like 27, 28% year-over-year growth. It gave us 32. And then as an AI investor, you see that capital expenditure. To me, if you're increasing your capital expenditure, even though they haven't said it, we haven't heard the earnings call. If they're talking about CapEx increasing, it means they still have way more demand on their cloud side, and they need to build up that infrastructure to meet up with that demand. So in theory, Google Cloud could be growing at even faster levels than it is right now.
Yeah, I think the two biggest things so far, guys, from Google down 2% right here is they're increasing CapEx, which is so freaking bullish if you own the semis, in particular NVIDIA and Broadcom. NVIDIA right here up almost 1%. And then two, if I was Sundar, the first thing I would put on the press release is that search is growing 11.5%. All the analysts have them at 8.5%, or at least most of the street consensus. Some of the more bullish analysts have them at around 11%. They even beat the bullish analysts because it's 11.5, not 11. That is phenomenal. That is not search is dead by any sense of the imagination. And if that's the narrative, then that's BS, because that can't be a real narrative. Search right there, up 11.7% year over year. We are waiting for Tesla. We should get it in a minute. We do have IBM. I forgot they were doing earnings, but let's look at IBM. That stock is down 3%. They beat revenue 17 billion versus 16.5. EPS 231. Free cash flow guidance 13.5 billion on IBM. IBM's down about 4.3%. All right, Tessie's next. Google gave us good numbers. The street is not rewarding it. Granted, the stock was up a ton going into the print, so it is what it is. It happens. Tesla, I don't know if we're going to get good numbers, and I don't know if the street's going to reward it, but we're going to find out in basically a minute. In basically 1 minute.
I saw some of the comments there asking why isn't AMD kind of pumping on this. Right now, Google is one of the few players that doesn't use AMD chips, so the market is more kind of giving that bullish sentiment towards kind of like your NVIDIA or Broadcom. But we can see now, you can kind of see maybe other big players are going to increase their CapEx if Google is doing it, and those other big players might increase their investments. So now we kind of see that pump happening here with AMD. So overall, very bullish as it starts this era that big cap, it's not going to be impossible for the other big tech players to announce a capital expenditure growth.
And Broadcom, all-time highs. It looks like the AI revolution is not stopping at all. And it's pretty incredible to kind of see how this is all playing out. So there you go. Broadcom right there up 3.3%. Tessie numbers should be out very soon. Tessie got a red candle. It's red, it's green. It is now red. It's flat, basically up 0.06. It was up 0.7. It looks like it wants to go further down. Now it's going down. Now it's down. Now it's down. Now it keeps going down. Can you please go up again? No, it's not. No, now it's going up. No, never mind. Now it's down. No, now it's up.
Keep saying please. Please.
Please. It's like an LLM, right? If you ask it nicely. Okay, now it's up. Now it's up. Jose, you get the numbers. I'm looking at the candle. Come on. Just turn around. Heaven is upwards. Hell is downwards. You want to go to heaven. Up 4.3. No, 0.4. 333. It's this is exactly what it did in Q1.
Yep.
It was flat.
Zero Hedge has the numbers right now. Tesla's second quarter revenue, 22.5 billion. It did beat a little, actually no, a small miss by about $150 million miss on the revenue. Adjusted earnings per share of 40 cents. It did miss by about 2 cents. But gross margins were a little bit higher than estimated, 17.2% versus 16.5%. So a small miss on the revenue, small miss on earnings per share, a small beat on gross margins. But pretty much, I think that's what we talked about at the beginning. We weren't expecting too much from this company, at least in these short results. Let's see what we get in forms of their actual presentation. Let's see if I can pull that up.
Dude, not too bad. 40 cents. That's what the street expected. Revenue 22.4 versus 22.1. Very small beat. EPS is down 23% year over year. Revenue's down 12%, but the street expected worse. And that's not what the street is getting. Tesla right here, although it's a very small green candle, it is green. Hit 338. Now it's at 335. Would not be surprised if it's flat. Would not be surprised if it goes down, but it's not absolutely disgusting. Gross margin 17.2. Street thought it would be 16.5. I mean, again, expectations were low, and at the very minimum, Tesla's beating some of those expectations. It's up to Elon, I guess, to see if this call can help pump it up.
I just sent you the link to the presentation if we want to open that in a bit.
Okay, let me see if we can get some coverage real quick on Tesla, and then we'll go deeper into the numbers. Google, again, great earnings so far. We'll see if that can reverse. We got the call in about 15 minutes from Googs, and then Tesla at 5:30. Here is some coverage on Tessie. Then Jose and I will go through the deck ourselves and see what we can get.
Well, we've got more earnings to bring you. Tesla results are out. Bill LeBeau has the numbers.
Morgan, this is a miss on the top and the bottom line for the second quarter for Tesla. The company earning 40 cents a share. The street was expecting 43 cents a share.
Some parts of the street were expecting 40 cents. So, I mean, like, you could call it a miss, but there are other analysts that expected 40 cents. So nothing too crazy there.
Revenue coming in at 22.5 billion, a little shy of the estimate of 22.736 billion. Just going through the investor report right now, we don't have a whole lot of details, but they do say that they have sufficient liquidity to fund the product roadmap that they have laid out, and that the plans for a new, lower cost, more affordable vehicle, if you will, coming to production this year, remain on track. What does that mean? Well, you've only got so many months left in this year, but that's the latest in terms of what we're seeing with the Tesla report. Don't forget, we're going to have more in a little bit. We'll come back to you guys as we get more details, especially with things like the automotive gross margin, excluding zero-emission vehicle credits. But the conference call is really what people will be focused on in terms of what Elon Musk has to say when it comes to robotaxi.
And we'll get that call in a bit. Tesla said its upcoming Cybercab will adopt the company's revolutionary unbox manufacturing strategy with volume production scheduled to begin in 2026. And they said that in the last call, so it looks like no difference there. Before we go through the numbers, let's just take a look at some of these stocks in the after hours. So Tesla now is getting a little bit of a pump, 1.5, even with the pseudo miss on EPS, which realistically came in line with expectations. Even if it was a slight miss, the street is not caring too much. Again, these numbers are not good by any sense. I mean, it's negative growth year over year. It's just not as bad as I think what some of the street thought would happen. Google is trying to go green, but it's still down. It's pretty incredible, right, Jose? Google crushes and it's down. Tesla doesn't crush, but they crushed against expectations and it's red.
But like you mentioned, right? I think you said Google had a kind of a nice run up in the past few weeks or so. I think one thing that Tesla investors might be a little bit excited was in the slideshow, it does talk about kind of that lower volume, lower cost product is still. It was supposed to happen this first half, but now they're saying it's happening in the second half. So at least we know it hasn't been thrown away, and that should still come out for maybe a new potential market for them.
Chipotle is down 7%. IBM's down 3%. T-Mobile is green. So T-Mobile and Tesla, T-Mobile up 5% are the ones that are leading right now after hours. Broadcom's up 3% based on what Google said. Nvidia's up 0.5%, and Google still fighting to get back into the green, while Tesla continues to stay green, up about 1%. All right, let's get into the deck. We got about 15 minutes until, or 14 minutes until we get to the call. I'm just going to read their summary real quick, and then we'll get into some of the numbers. This is from Tesla's Q2 deck. Q2 2025 was a seminal point in Tesla's history, the beginning of our transition from leading the electric vehicle and renewable energy industries to also becoming a leader in AI, robotics, and related services. Our first robotaxi service launched in Austin in June. While the service is limited in initial scope, we believe our approach to autonomy, a camera-only architecture with neural networks trained on data from our global fleet of millions of vehicles, allows us to continually improve safety and improve profitability. We continue to expand our vehicle offering, including the first builds of a more affordable model in June with our volume production plan for the second half of 2025. Additionally, we continue to development of Semi and Cybercab, both slated for 2026. The energy business is more critical than ever. The availability of clean, reliable energy is necessary for economic growth and an imperative for the development and commercialization of AI-enabled products and services. As electricity demand grows, our Megapack product helps to increase the utilization of existing generation and transmission capacity, resulting in a more efficient use of our electric grid. Despite a sustained, uncertain macroeconomic environment relating from shifting tariffs to unclear impacts from changes to fiscal policy and political sentiment, we continue to make high-value investments in CapEx and R&D while ensuring a strong balance sheet. Our priorities remain the same: delivering affordable and compelling autonomy-capable models that maximize our global fleet of vehicles as our autonomy software continues to rapidly progress, growing the energy business and advancing our robotics efforts. That is a summary from Tessie. We know most of the delivery numbers already, so we'll look at some of the other stuff. On product, they say our focus remains on prudently growing our vehicle volumes in a CapEx-efficient manner by using our existing vehicle production capacity before building new lines. Plans for new vehicles that will launch in 2025 remain on track, including a production of an affordable model in H1 2025. Okay, that doesn't make any sense because we're done with H1 2025. We are literally in H2, unless they're saying
it's weird.
Someone forgot to... Someone forgot to change the copy and paste on that one. Our purpose-built robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy, and that'll start in 2026. One
thing I'm curious about is if you're looking at the numbers, free cash flow took a massive hit this quarter. I wonder if they talk a little bit about that. If you go to the next slide, I think it was down about 86%. Yeah, you can see free cash flow was about 146. Down 89%. So I'm gonna look through the slide, maybe some indication of where it's happening, or is it just the loss of kind of a weaker revenue market right now?
That is, who has a good explanation on why free cash flow took that hit? Does that have to do with carbon credits or anything like that? Because I don't think that has an effect until the end of the year. 89% below, that can't just be due to vehicle sales, and their margins were better this quarter, so I don't think it's because of gross margins. It looks like there's something else going on right there. Tesla now not going red, but definitely losing that initial 2% move. And it is a bit flat. Farzad, shout out to you right there. Call us at 5:30 if you have time. They started production on cheaper model and likely delayed to Q4 due to EV credit expiring in Q3. Okay, that sounds good. So that also is a little bit of an explanation on why they still included H1 2025 if they did start production of that less affordable or more affordable vehicle in terms of the Model Y or even the Model 3. NVIDIA right here, that's up about 0.5%. AMD's up 0.5%. Broadcom's up 2.9%. And then Tessie's still up 0.5%. Chipotle's down 8%. ServiceNow, they also had earnings. Forgot about that. That's up 7%. Big enterprise AI name. That one is also up 7%. Here's a quick overview on Google again for those that missed it. These were the numbers. EPS 231 versus 227, revenue 96.4 versus 93, cloud 13, advertising 71, search. I mean, I don't think you can ask for you can't ask for better growth than 11.7%. 54 billion, operating margins 32%, and net income 28.2. Jose, which one do you think had a better earnings based on these numbers, Google or Tesla? As we dive,
I think as the now numbers, Google's numbers were insane. Okay, not insane. They were great. It kind of eliminates that fear theory about the AI market and about some of the other players. So I really like it. And obviously, as an AI investor, seeing CapEx grow is something that makes me bullish in this overall market still.
Sundar Pichai said, we had a standout quarter with robust growth across the company. We are leading at the frontier of AI and shipping at an incredible pace. AI is positively impacting every part of our business, driving strong momentum. Search delivered double-digit revenue growth, and our new features like AI overviews and AI mode are performing well. We continue to see strong performance in YouTube as well as subscription offerings, and cloud has grown strong in revenues, backlog, and profitability. Its annual revenue run rate is now more than $50 billion. With the strong and growing demand for our cloud products and services, we are increasing CapEx to $85 billion. Operating margins are the same year over year. Operating income has increased as revenue has increased, 31 billion versus 27 billion. And their net income, goodness gracious, dude, $28 billion of pure profit is what this company does. 28 billion pure profit. And the street's treating them at 18 times earnings.
I think this is where Google going first, it kind of sets the tone for the other cloud service providers. We see that Google beat on cloud revenue growth versus what the market was expecting. Now, is this growth due to it taking market share from AWS or from Microsoft Azure, or is just the demand that crazy? Regardless, now you have to see both Amazon and Microsoft announce numbers better than what the Wall Street expects. If not, they're going to be seen as they're the ones losing that market share to Google. So I think that's what's nice about maybe going first. You kind of set the tone for the rest of the market.
I agree. I think it is setting the tone the right way. Real quick, let's see why Chipotle is getting hammered after hours.
Line at 33 cents adjusted. Revenues just slightly below estimates, 3.06 billion for Q2. Analysts were looking for 3.11 billion. Same store sales came in lower than expected, down 4%. Analysts were projecting a fall of 2.9%. This is its second consecutive contraction and also the biggest since the second quarter of 2020. Chipotle, though, reporting a return to positive comparable sales and transactions in the month of June. Its restaurant level margins right in line at 27.4%. The company noted inflation across several of its key ingredients, primarily steak and chicken. For the full year, it's cutting guidance to about flat for full year comp sales. That's down from the prior guidance of low single-digit growth. In a statement, CEO Scott Boatwright said the company was seeing its momentum build as it rolled out its summer marketing initiatives and comparisons ease. You can see the stock is down.
All right, so it looks like maybe Kava or some of these other companies are taking a little bit of market share away from Chipotle. That one is down. Tesla goes red. Tesla goes red. T-Mobile's holding 5%. ServiceNow is holding 6%. Google, wow, they're taking it down 2%. Guys, I mean, honestly, for those that are confused, I think it really is a Netflix situation where the stock ran up going into earnings, because I cannot imagine how those numbers, especially search, are bearish and you would sell the stock on that. So I think it's just people taking profits. Tesla, you can understand, but Tesla's not as red as Google, down about 2% right here.
Yeah. I'm extremely sad about Chipotle news because I feel like now when I go to Chipotle, they're going to be light on their food. So they have to make those margins back up.
They have to make those margins somehow. That's weird, man. This was a great quarter by the Googs. I mean, my biggest fear was search, and the fact that they were able to pull that up to almost year-over-year growths being break even, which, you know, is way better than what people expected, because the narrative is that search is dead. So there's no way that search could be growing. It's not growing at 13%, but at 11.7, it's pretty damn close. So I would not be surprised if when the market opens tomorrow, this one shoots back up. NVIDIA's up a little bit based on that CapEx, and then Broadcom up 3% on the 85 billion for increasing on CapEx. Okay, going deeper into some of the Tesla numbers, we still have this deck. We have until 5:30 to kind of see what happens here. Total revenue decreased 12% year over year. They said revenue was affected by decline in vehicle deliveries, lower regulatory credit revenue that could also be hurting free cash flow, reduced vehicle average selling price. Those were the incentives they did to get people to buy the car in the first place. Decline in energy generation and storage revenue due to lower average selling price, and growth in services and other. Okay, profitability was hit with lower regulatory credit revenue, increase in OPEX, decline in vehicle deliveries, increase in SBC. What helped is decrease in some of their restructuring charges, lower cost per vehicle, and growth in energy generation and storage gross profit. They have $37 billion in cash,
which is wild.
Yeah, and they're not doing buybacks, so they have plenty of cash to do what they need to do. Their cost of goods, I would like to see if anyone has the COGS, because last quarter it was one of the lowest COGS they ever had. Maybe if that one's coming down, that's also something bullish we can look to as well. All right, that's what you got. That's what you got on some of these earnings. Chipotle's down. ServiceNow, let's take a look at those results real quick. That one is surging after hours, up almost 5% or almost 7% right here.
Q2 beat on the top and bottom line. The company's raising guidance. I spoke with CEO Bill McDermott about the results as well. First, the quarter revenue was $3.22 billion versus $3.12 expected. Non-GAAP EPS $4.09 versus $3.57. On the guide, ServiceNow promising Q3 subscription revenue of $3.26 billion to $3.27 billion. So that's $3.275 at the midpoint versus expectations of $3.21 billion. Operating margin and backlog both beat as well. CEO Bill McDermott told me about the quarter. On AI demand, he said the AI Control Tower, which is that control tower that governs, monitors, and optimizes the agentic workforce on one platform, achieved its full-year operating plan in 60 days. The silos and the industrial software complex of the 20th century is collapsing into a cross-functional way of working. These organization charts are going to get busted up in these enterprises, and AI is going to turn them upside down. On industries where ServiceNow's outperformance came from, he said, unbelievable growth in transportation and logistics. They've got to deal with a lot of things in real time. Technology, media, and telecom. So these two respectively were up. One was 100%, the other was 70% year over year. And retail, hospitality, energy, and utilities were all up 50% year on year. So what you're seeing is the AI ability to take OpEx down is driving all these companies to act.
That's also increasing those companies' margins, which is why companies like Palantir are getting as much demand. It's really good to see ServiceNow growing at the level they're growing at, because that is very good for companies in the enterprise software space like Palantir, that their entire pitch is that AI is going to change your business. And it looks like ServiceNow is executing on that as well. NVIDIA right here, 170. Tesla goes down, 1.4. Tesla goes down.
I think someone in your chat said it pretty good. I think it was David. They mentioned that ServiceNow is what kind of Salesforce wants to be. I mean, you're kind of seeing that AI agent grow. And I think it's a great indication, right? They talk about how it's not that with AI, you're going to see massive revenue growth from these other players. You're actually going to see more of a better margins due to operating expenses going down, just because you're using more AI to kind of do a lot of these tasks. And I think that's how investors should start looking at some of these AI companies or some of these players using AI. It's not that you expect their revenue growth to grow dramatically. What you're expecting is that free cash flow, that operating cash flow, that earnings per share to grow at a faster rate than revenue. So I think that's how most investors should be looking at kind of this AI market right now.
I would agree. We got 2 minutes until the call starts for Google. By the way, this picture makes me very happy. We got Mr. Tom Lee taking a picture with Jensen Huang. Very cool to see that. NVIDIA is a granny shot in Tom Lee's ETF. So you got two of them meeting at the AI Summit in DC. All right, last question for you, Jose. What do you expect Sundar to say on this call?
Gemini is killing it. AI overviews is doing really well, and Google Cloud is still compute constrained, so they need to invest more. And I would love to hear maybe some more of some of the acquisitions. They kind of did that crazy acquisition of that failed OpenAI company. We'd love to hear some of the mindset that happened with that and how they acquired some talent. And is that the new normal? Are we expected to see massive amount of money going into some of these AI engineers and AI talent? But I think he's just going to showcase more strength from Gemini in general.
Agreed. I expect them to explain that there is going to be tons of momentum when it comes to AI growth. Also, that opening statement inside of his press release was pretty damn bullish. They increased CapEx, they feel good with search, and they understand that cloud is growing at a pretty constructive way. So I expect there to be some confidence from Sundar. I know some people have criticized his communication, but the earnings results are there for him to be pretty confident because the numbers are backing him up. And now it's time for him to communicate that to the street. And maybe this negative 1.4 turns into a positive 1.4 if we can get some good results from Google on the call. Tesla right here down about 1%. Google down 1.4. Grab is up 1.2 after hours. Palantir is down about 0.5%. And then ServiceNow is up 6.3. T-Mobile's up 5. Chipotle is now down 9%. That one is getting hit. All right, Google, let's get into it.
2025 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during this session, you will need to press star one on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Head of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's second quarter 2025 earnings conference call. With us today are Sundar Pichai, Philipp Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thanks, Jim. Good afternoon, everyone. Q2 was a standout quarter for us, with robust growth across the company. As you saw at I/O, we are leading at the frontier of AI and shipping at an incredible pace. AI is positively impacting every part of the business, driving strong momentum. This quarter, Search delivered double-digit revenue growth. Our new search features continue to perform well. AI Mode has launched in the US and India and is going well, while AI Overviews now has over 2 billion monthly users across more than 200 countries and territories and 40 languages. I'll give some more details on Search in a moment. We continue to see strong performance in YouTube as well as subscriptions, reflecting great momentum across these high-growth businesses. In the US, Shorts now earn as much revenue per watch hour as traditional in-stream on YouTube. And in some countries, it now even exceeds in-streams rate. Cloud had another great quarter of strong growth in revenues, backlog, and profitability. Its annual revenue run rate is now more than $50 billion. We are seeing significant demand for our comprehensive AI product portfolio. Of course, this is all possible because of the long-term investments we have made in our differentiated, full-stack approach to AI. This spans AI infrastructure, world-class research, models and tooling, and our products and platforms that brings AI to people all over the world. I'll briefly touch on the AI stack before turning to quarterly highlights. First, AI infrastructure. We operate the leading global network of AI-optimized data centers and cloud regions. We also offer the industry's widest range of TPUs and GPUs, along with storage and software built on top. That's why nearly all Gen AI unicorns use Google Cloud. And it's why a growing number, including leading AI research labs like Safe Superintelligence and Physical Intelligence, use TPUs specifically. Our AI infrastructure investments are crucial to meeting the growth and demand from cloud customers. Next, world-class AI research, including models and tooling. We continue to expand our Gemini 2.5 family of hybrid reasoning models, which provide industry-leading performance in nearly every major benchmark. In addition to improving our popular workhorse model, Flash, we debuted an extremely fast Flashlight version. We achieved gold medal level performance in the International Math Olympiad using an advanced version of Gemini with DeepThink. We can't wait to bring DeepThink to users soon. We have some of the best models available today at every price point. Our 2.5 models have been a catalyst for growth, and 9 million developers have now built with Gemini. I also want to mention Veo 3, our state-of-the-art video generation model. It's been a viral hit, with people sharing clips created in the Gemini app and with our new AI filmmaking tool, Flow. Since May, over 70 million videos have been generated using Veo 3. And we recently introduced a feature in the Gemini app to turn photos into videos, which people absolutely love. It's also rolling out to Google Photos users starting today. Third, our products and platforms. We are bringing AI to all our users and partners through surfaces like Workspace, Chrome, and more. The growth in usage has been incredible. At I/O in May, we announced that we processed 480 trillion monthly tokens across our surfaces. Since then, we have doubled that number, now processing over 980 trillion monthly tokens, a remarkable increase. The Gemini app now has more than 450 million monthly active users, and we continue to see strong growth and engagement, with daily requests growing over 50% from Q1. In June alone, over 50 million people used AI-powered meeting notes in Google Meet. And powered by VO3, our new short video product in Workspace called Google Vids reached nearly 1 million monthly active users. This month at Samsung Galaxy Unpacked, we announced new Android and AI features that are available on Samsung's latest devices. And we are really pleased with the growth in subscriptions, which got a boost from our Google AI Pro and Ultra plans. Now, some key highlights from Search, Cloud, YouTube, and Waymo for the quarter. First up, this is an incredibly exciting moment for search. We see AI powering an expansion in how people are searching for and accessing information, unlocking completely new kinds of questions you can ask Google. Overall queries and commercial queries on search continue to grow year over year. And our new AI experiences significantly contributed to this increase in usage. We are also seeing that our AI features cause users to search more as they learn that search can meet more of their needs. That's especially true for younger users. Let me go deeper on our new search experiences. We know how popular AI overviews are because they are now driving over 10% more queries globally for the types of queries that show them. And this growth continues to increase over time. AI overviews are now powered by Gemini 2.5, delivering the fastest AI responses in the industry. We also saw strong growth in the use of multimodal search, particularly the combination of Lens or Circle to Search together with AI overviews. This growth was most pronounced among younger users. Our new end-to-end AI search experience, AI Mode, continues to receive very positive feedback, particularly for longer and more complex questions. It's still rolling out, but already has over 100 million monthly active users in the US and India. We plan to keep enhancing the AI Mode experience for users by shipping great features fast. That includes our advanced research tool, Deep Search, and more personalized responses. Next, Google Cloud. We see strong customer demand driven by our product differentiation and our comprehensive AI product portfolio. 4 stats show this. 1, the number of deals over $250 million, doubling year over year. 2, in the first half of 2025, we signed the same number of deals over $1 billion that we did in all of 2024. 3, the number of new GCP customers increased by nearly 28% quarter over quarter. 4, more than 85,000 enterprises, including LVMH, Salesforce, and Singapore's DBS Bank, now built with Gemini, driving a 35x growth in Gemini usage year over year. Our models are served on our AI infrastructure, which offers industry-leading performance and cost efficiency for both training and inference. Along with our AI accelerators, we introduced new innovations in storage, including Anywhere Cache, which improves inference latency by up to 70%, and Rapid Storage, which delivers a 5x improvement in latency compared to leading hyperscalers. In addition, we have optimized AI software packages, including PyTorch and JAX, with full open source supports for various AI training and serving demands. We've also integrated AI agents deeply into each of our cloud products. Wayfair is leveraging our databases integrated with AI to streamline data pipelines and deliver more personalized customer experiences. Mattel is leveraging our Gemini-powered data agents and BigQuery to review and act on product feedback more quickly. Target is using our Gemini-powered threat intelligence and security operations agents to improve cybersecurity. Capgemini is utilizing our AI software engineering agents to deliver higher quality software faster by automating tasks from code generation to testing. And BBVA says Gemini in Google Workspace is saving employees nearly 3 hours per week by automating repetitive tasks. It's now rolling it out to 100,000 employees globally. We are also focused on building a flourishing AI agent ecosystem. We introduced an open source agent development kit, which now has over 1 million downloads in less than 4 months. We also introduced Agent Space, an open and interoperable enterprise chat, search, and agent platform. Gordon Food Service is bringing Agent Space to its US employees, which is enabling better, more efficient decision-making. And over 1 million subscriptions have been booked for Agent Space ahead of its general availability. Turning now to YouTube. Nielsen data shows YouTube has led US streaming watch time for over 2 years. A generation that grew up with YouTube on their devices is now increasingly watching their favorite creators and content on their televisions. That includes billions of sports fans too. Globally, they consume more than 40 billion hours of sports content on YouTube annually. And in September, we'll stream the NFL's first Friday game of the season live from Brazil. From sports to shorts, we now average over 200 billion daily views on YouTube Shorts. AI is helping improve our recommendations and auto dubbing, which translates to better returns for creators and brands by dramatically increasing the potential audiences they can reach. And today we began rolling out a whole raft of new AI tools for creators on YouTube Shorts. Finally, YouTube continues to diversify its subscription options, recently expanding its Premium Lite offerings to 15 new countries with more to come. And lastly, Waymo continues to scale and expand to safely serve more riders in more places. Last month, Waymo launched in Atlanta, more than doubled its Austin service territory, and expanded its Los Angeles and San Francisco Bay Area territories by approximately 50%. Waymo also launched teen accounts, starting with riders aged 14 to 17 in Phoenix. Overall, great momentum here. The Waymo driver has now autonomously driven over 100 million miles on public roads. And the team is testing across more than 10 cities this year, including New York and Philadelphia. We hope to serve riders in all 10 in the future. As I said, a standout quarter. A big thank you as always to our employees and partners for an amazing Q2. Philip, over to you.
Thanks, Sundar, and hello, everyone. I'll quickly cover performance for Google services for the quarter, then structure the rest of my remarks around the great progress we're delivering across search, ads, YouTube, and partnerships. Google services revenues were $83 billion for the quarter, up 12% year-on-year, driven by strong growth in search and YouTube, partially offset by year-on-year decline in network revenues. To add some further color to our results, the 12% increase in search and other revenues was led by growth across all verticals, with the largest contributions from retail and financial services. YouTube saw similar performance across verticals. Its 13% growth in advertising revenues was driven by direct response, followed by brand. Starting with search and you for the quarter. Shifts like AI are what propels our industry forward. Gemini's native multimodality is helping bring the offline audio and visual world back into the online world, creating a number of opportunities for search. Let me share a few examples. Take visual queries. Google Lens searches are one of the fastest growing query types on search and grew 70% since this time last year. The majority of Lens searches are incremental, and we're seeing healthy growth for shopping queries using Lens. And you can obviously take this to the next level by moving from image to video-based capabilities like Search Live. And then there's Circle to Search, which is now on over 300 million Android devices. We've been adding capabilities to help people explore complex topics and ask follow-up questions without switching apps. For example, gamers can now use Circle to Search while playing mobile games to see an AI overview or answers. And just last week, we brought a new agentic capability directly into search for all US users with AI-powered calling to local businesses. Finally, shopping, where in Q2 we introduced a virtual try-on experience for Search Labs users in the US. Now people can try billions of clothing products on themselves virtually. Early results and engagement have been extremely positive, particularly with Gen Z users, and we'll be bringing this functionality to all US users imminently. All these innovations are opening up completely new ways for people to use technology, bringing the offline world into the online world in ways that simply have not been possible before. Add in our amazing AI translation capabilities and just imagine the possibilities. People can access more content in the language, and businesses, large and small, international or local, can reach even more customers. I'm excited about how all of these elements will come together and the opportunities ahead of us in search. Moving to ads, where our strategy to reinvent the entire marketing process with AI is delivering value for our customers and our business. Last quarter, we introduced AI Max in Search, a new suite of AI-powered features in existing search campaigns. Advertisers that activate AI Max in Search campaigns typically see 14% more conversions. On media buying, smart bidding exploration, the biggest update to bidding strategy in a decade, brings better performance to advertisers by allowing them to bid on less obvious but potentially higher value queries more often. Campaigns using smart bidding exploration see a 19% increase in conversions on average. Demand gen continues to drive revenue growth and deliver measurable impact for our customers. As an example, Depop, Etsy's resale clothing marketplace, used a Shorts-only demand gen campaign to drive new customers to the site. Shorts drove 80% higher brand lift and double click-through rates versus benchmarks. On creatives, we launched Asset Studio, using our latest models to help businesses, large and small, generate creative assets. Small businesses benefit from top quality assets and deployment scaling capabilities, but larger businesses can go faster from proof of concept to launch and resize at lower costs. Over 2 million advertisers now use Google's AI-powered asset generation tools to run ads, a 50% increase on this time last year. Turning to YouTube, where we saw continued strong revenue growth, driven by direct response followed by brand. YouTube creators are connected to the global zeitgeist and trusted by their audiences like no others. As part of Brand Connect, we launched Creator Partnership Hub, which allows brands to more easily work with the right creators and tap into cultural moments. We introduced Veo 3, photo to video, and generative effects to Shorts, making content creation easier and offering unexplored avenues for creativity. We're seeing both the volume and the price of ads in Shorts increase, particularly in developed markets. The feed-based nature of the product allows for more ad opportunities on average, and this growth is further supported by ad formats native to Shorts, AI-powered ad creative resizing tools, improved ad targeting, and the rise in viewer engagement. McDonald's USA harnessed the influence of YouTube creators to ignite awareness for the Minecraft movie meal. It leveraged YouTube Shorts partnership ads to increase its reach, generating a 3.3 times higher view-through rate than the industry benchmark. Finally, on CTV, where the momentum continues. According to the Gauge report by Nielsen, YouTube has been #1 in streaming watch time in the US for more than 2 years, hitting a record high of 12.8% of total TV viewing in June 2025. In the past 12 months, YouTube ads viewed on CTV screens drove over 1 billion conversions. We saw strong growth in retail thanks to CTV shopping ads, which allows viewers to shop directly via QR codes, helping us leverage direct marketing opportunities. As always, I'll wrap up with the momentum we're seeing in partnerships, where customers increasingly recognize the strength and breadth of Google's ability to help them transform their business with AI. For instance, a new partnership with PayPal will improve the digital commerce experience for their merchants and customers. PayPal will expand its Google Cloud adoption for AI-driven recommendations, transaction processing, and enhanced security. The partnership also broadens the availability and functionality of PayPal's payment services and capabilities across a range of Google products. In closing, I'd like to thank Googlers everywhere for their contributions and commitment to our success, and to our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the second quarter, unless I state otherwise. I will start with results at the Alphabet level, and will then cover our segment results. I'll end with some commentary on our outlook for the second half of 2025. We had another solid quarter in Q2. Consolidated revenue of $96.4 billion increased by 14%, or 13% in constant currency. Search and YouTube advertising, subscription platforms and devices, and Google Cloud each had double-digit revenue growth this quarter, reflecting strong momentum across the business. Total cost of revenue was $39 billion, up 10%. Tech was $14.7 billion, up 10%, And other costs of revenue was $24.3 billion, up 10%, with the increase primarily driven by content acquisition costs, largely for YouTube, followed by depreciation. Total operating expenses increased 20% to $26.1 billion. The biggest driver of growth was expense for legal and other matters, which reflected the impact of $1.4 billion charge related to a settlement in principle of certain legal matters. R&D investments increased by 16%, primarily driven by increases in compensation and depreciation expenses. Sales and marketing expenses increased 5%, primarily reflecting an increase in advertising and promotional expenses. Operating income increased 14% this quarter to $31.3 billion, and operating margin was 32.4%. Operating margin benefited from strong revenue growth and continued efficiencies in our expense base, partially offset by the legal charge I mentioned earlier, and a significant increase in depreciation expense. Net income increased 19% to $28.2 billion, and earnings per share increased 22% to $2.31. We generated free cash flow of $5.3 billion in the second quarter and $66.7 billion for the trailing 12 months. Free cash flow in the second quarter was affected by a sizable sequential increase in CapEx and cash tax payments, as we make federal tax payments in the second quarter for both Q1 and Q2. We ended the quarter with $95 billion in cash and marketable securities. Turning to segment results, Google Services revenues increased 12% to $82.5 billion, reflecting strength in Google Search and YouTube advertising and subscriptions. Google Search and other revenues increased by 12% to $54.2 billion. Search and other revenues delivered growth across all verticals, with the largest contributions coming from retail and financial services. YouTube advertising revenues increased 13% to $9.8 billion, driven by direct response advertising, followed by brand. Network advertising revenue of $7.4 billion were down 1%. Subscription, platforms, and devices revenues increased 20% to $11.2 billion, primarily reflecting growth in subscription revenues. This growth was driven by YouTube subscription offerings, followed by Google One, with growth in paid subscriptions being the biggest driver of revenue growth. Google Service operating income increased 11% to $33.1 billion. Operating margin was flat year-on-year at 40.1%, as healthy revenue growth and continued efficiency in our expense base were partially offset by the legal charge I mentioned earlier. Turning to the Google Cloud segment, which delivered very strong results this quarter. Revenues increased by 32% to $13.6 billion in the second quarter, reflecting growth in GCP across core and AI products at the rate that was much higher than Cloud's overall revenue growth, and growth in Google Workspace, driven by an increase in average revenue per seat and the number of seats. Google Cloud operating income increased to $2.8 billion, and operating margin increased from 11.3% to 20.7%. The expansion in cloud operating margin was driven by strong revenue performance and continued efficiencies in our expense base, partially offset by higher technical infrastructure usage costs, which includes the associated depreciation. As we ramp our AI investments, we continue to focus on driving improvements in productivity and efficiency to offset growth in technical infrastructure-related expenses, particularly from higher depreciation. Google Cloud backlog increased 18% sequentially in Q2 and 38% year-over-year, reaching $106 billion at the end of the quarter. This growth was driven by strong demand for our products and services from both new and existing customers. As Sundar mentioned, we have signed multiple billion-dollar-plus deals in the first half of the year. As to our other bets, in the second quarter, revenue were $373 million, and operating loss was $1.2 billion. Within other bets, we're allocating more resources to businesses like Waymo, where we see opportunities to create additional value. With respect to CapEx, in the second quarter, our CapEx was $22.4 billion. The vast majority of our CapEx was invested in technical infrastructure, with approximately 2/3 of investments in servers and 1/3 in data centers and networking equipment. In Q2, we returned capital to shareholders through repurchase of stock of $13.6 billion and dividend payments of $2.5 billion. Turning to our outlook, I would like to provide some commentary on several factors that will impact our business performance in the second half of 2025, as well as an updated outlook for full-year CapEx. First, in terms of revenues, we're pleased with the overall momentum we're seeing across the business. At current spot rates, we could see a tailwind to our revenue in Q3. However, volatility in exchange rates could affect the impact of FX on Q3 revenue. As for our segments, in Google Services, advertising revenues in the second half of 2025 will be affected by the following: the continued lapping of the strength we experienced in financial service verticals throughout 2024, and year-over-year comparisons will be negatively impacted by the strong spend on U.S. election in the second half of 2024, particularly on YouTube. In cloud, as I mentioned, the demand for our products is high, as evidenced by the continued revenue growth and the cloud backlog of $106 billion. While we have been working hard to increase capacity and have improved the pace of server deployment, we expect to remain in a tight demand-supply environment going into 2026. Moving to investments, given the strong demand for our cloud products and services, we now expect to invest approximately $85 billion in CapEx in 2025, up from a previous estimate of $75 billion. Our updated outlook reflects additional investment in servers, the timing of delivery of servers, and an acceleration in the pace of data center construction, primarily to meet cloud customer demand. Looking out to 2026, we expect a further increase in CapEx due to the demand we're seeing from customers, as well as growth opportunities across the company. We will provide more details on the 2026 CapEx outlook on a future earnings call. In terms of expenses, first, as I mentioned on our previous earnings call, the significant increase in our investments in CapEx over the past few years will continue to put pressure on the P&L, primarily in the form of higher depreciation. In the second quarter, depreciation increased $1.3 billion year-over-year to $5 billion, reflecting a growth rate of 35%. Given the recent increase in CapEx investments, we expect the growth rate in depreciation to accelerate further in Q3. Second, as we've previously said, we expect some headcount growth in 2025 in key investment areas. In the third quarter, we expect a sequential increase in total headcount additions, due in part to the hiring of new graduates. And third, Q3 will reflect the expense associated with the upcoming August launch of the new Pixel family of products. In conclusion, as you heard from Sundar and Philipp, we're pleased with the momentum in the business and excited about the pace of innovation. Our full-stack approach, which combines AI infrastructure, AI research, and AI products and platforms, position us well to deliver new products and services across the company. We're seeing great momentum with our AI efforts, as demonstrated by the increase in cumulative token processed. Search revenues are seeing healthy growth, with features like AI Overviews, AI Mode, and Lens offering new ways for users to access information. Cloud has reached an annual revenue run rate of more than $50 billion and is delivering margin expansion while continuing to invest to meet customer demand. And YouTube has expanded its addressable market by building new services like Shorts, which now averages over 200 billion daily views. We're excited to see the value our products and services are bringing to customers and partners around the globe. Now I'll turn the call over to the operator, and Sundar and Philipp and I will take your questions.
Q&A.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Your first question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you so much for taking the question. Maybe one for Sundar and one for Philipp. Sundar, when you think about the journey you're on with respect to the evolution of products and platforms, how do you think about some of the implications of changed consumer behavior and how investors should think about that from the volume perspective versus the monetization perspective? Because I think there's a lot of longstanding dynamics out there about clicks and click monetization that might be very different when you look out over the next 3 to 5 years. And Philipp, when you think about the evolution of YouTube, You made a number of comments there about subscription revenue. I'm just curious how you think about the mix of advertising versus subscription and what some of your key learnings might have been as the subscription side of the business continues to scale. Thank you.
Thanks, Eric. Appreciate the question. I do think looking ahead, based on everything we are seeing, it's people are excited about AI. They are adopting it well across our products. For me, just seeing multimodality, how people have modified their behavior to include images, both through Lens and Circle to Search, seamlessly as part of interacting with Google. Our early indications that people are going to be adopting through these moments very, very well. I think I'm trying to understand your question in terms of about clicks and click monetization. Maybe that's something Philip can touch on. But overall, we expect as we build out our organic experiences, we have a good understanding of how to continue iterating on monetization, so that'll work well with the organic experiences. But we will lead with the organic experience. So in terms of newer surfaces like Gemini app, etc., we'll focus on the organic experience for the near term. But just like we are doing with AI overviews and with AI mode over time, we'll be able to bring very, very good commercial experiences there as well. And we think people will adapt to them as they've always done. Maybe Philip can add more. Philip?
Yeah. So on your question on YouTube subscriptions versus ads, look, I mean, we love our ads business. We love our subscription business. YouTube subscriptions are increasingly important for YouTube. We'll definitely continue our long-term focus here. We had a strong growth across YouTube subscription products, which includes, just to be clear, YouTube TV, YouTube Music, and Premium. And I think one common theme for our subscription services in general is offering viewers more choice here. We also have a very deep understanding of the monetization side here. Where are we monetizing more with ads? Where can we potentially monetize more with subscriptions? So I think we will continue this as a double tier strategy actively going forward.
Thank you.
Our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks so much for taking the questions. One for Sundar, one for Philip. Sundar, can you just talk about how you're thinking about your current access to compute? Even as you spend $10 billion more this year in CapEx, you also said that you're still in a tight supply environment, so just trying to marry those. And then Phil, perhaps on search growth, can you talk a little bit about paid click and pricing growth just within the 12% search growth and how we should think about volume versus monetization trends going forward? Thanks.
Doug, thanks. On the CapEx stuff, obviously we are seeing strong momentum across our portfolio and especially in cloud. You are right; it's a tight supply environment, and we are investing more to expand, but there is obviously a time delay between this additional investment will play out in future years, and so that's why both of them are true at the same time. But we are planning ahead and we are investing, and but overall it's exciting to see the traction, particularly in cloud. I think the comprehensiveness of our AI portfolio, the breadth of our offerings, both providing our models on GPUs and TPUs for our customers, all of that has been really driving demand, and so we are investing to match up to it.
And on your paid click question, look, to be very clear, I think we said this before, we manage the business to drive great outcomes for our users and an attractive ROI for our advertisers. We actually don't manage to pay clicks and CPC targets. Some of the product and policy changes we make actually drive better monetization at the expense of paid clicks. you will actually see in the 10Q, paid clicks were up 4% year on year. But a number of factors affect these metrics from quarter to quarter, such as a few examples: advertiser spending, product changes, policy changes, user engagement, and so on. So it's really important when it comes to paid clicks and CPCs to avoid drawing like overly broad conclusions solely based on these metrics.
Thank you both.
Our next question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. I have two. First one, Sundar, there's a lot of discussion about agentic search for commercial activities and agents that can be broadly deployed. Maybe could you just, from a technology perspective, when you sit down with the engineering teams working on some of these new agentic capabilities that could come, what are some of the predominant technological hurdles they think need to be cleared in order to launch scalable agents for commercial queries is the first one. And the second one, I think in the past you've updated us on stats on sources of internal efficiency you've seen from Gen AI enabled capabilities. Any updates there? And then any sort of learnings on friction points that also need to be overcome for some of these internal tools with Gen AI? Thanks.
Thanks, Brian. Let me start with the first one on agentic capabilities. Look, overall, we are definitely, in many ways, when we built 2.5, our series of 2.5 models, particularly with Pro, etc., it's the direction where we are investing the most. There's definitely exciting progress, including in the models we haven't fully released yet. And the main gaps we are all trying to do is, you're obviously chaining a sequence of events. And so being able to do it reliably, the latency compounds, the cost compounds, and being able to do it reliably in a way for the users, all of this comes together. In each of this, we are making progress, and it all needs to kind of hang together. The good news is we are making robust progress. We think we are at the frontier there. And in all of these areas, when you look back in a 12-month basis, you end up making the models much more efficient for any given capability. So the forward-looking trajectory, I think, will really unlock these agentic experiences. We see the potential. We're able to do them, but they're a bit slow and costly and takes time and sometimes are brittle, right? But we're making progress on all of that. And I think that's what will really unlock. And I expect 2026 to be the year in which people kind of use agentic experiences more broadly, right? And so it's an exciting opportunity ahead. On the second part, I think when you say sources of internalization, I presume you're talking about how we are using all of this internally. Again, given you asked a question about agents, we are now beginning to roll out agentic coding journeys for our software engineers within the company. And it's been exciting to see just over the last few months, particularly over the last few weeks, people are definitely doing more agentic workflows in software engineering as well internally. And that's a good example of the kind of the same experiences a few months ago had a lot of friction points, but we are overcoming it, and people are beginning to use internally on the coding side, as well as in certain other areas of the company as well. So exciting progress. I expect it to be an active area where we will roll out journeys for our users as well. So look forward to it.
Thanks, Sundar. That's great.
Our next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. Sundar, I have two for you. At I/O, you announced a partnership with Warby Parker to develop glasses. So I wonder if you share your view of how important a cycle of new devices will be to further scale AI, and do you envision a world in which the mobile phone is no longer central to our consumer experience? That's one. And secondly, how does Google Search with AI mode usage differ versus Gemini standalone apps? I'm wondering, are you seeing any differences in usage or the types of consumers who go to the app versus who go to traditional search with AI? Thanks.
Thanks, Michael. On the first thing, look, I think anytime I/O changes, you can drive new experiences, including on hardware experiences too. So I think AI will particularly enable. We've long had the promise of glasses and other form factors, but I think AI will spur a whole new wave of innovation there. We are super excited about our investment in glasses, and found the experiences have taken a dramatic step up compared to the last iteration. So I think it'll be an exciting new emerging category, but I still expect phones to be at the center of the experience, for the next 2 to 3 years at least. And so I still think that's going to be phones would continue to be at the center of the consumer experience. But we are excited about the emerging categories as well. On your second question on AI mode versus Gemini standalone app, broadly, there are some use cases where you can get a great experience in both places. But there are use cases which are very specific. I think where the queries are, information oriented, but people really want to rely on the information, but have the full power of AI. I think AI mode really shines in that. You can go there and it's backed up. The Gemini models are using search deeply as a tool. And so it's all grounded in that search experience. And I think users are responding very positively to it. And whereas in the Gemini standalone app, you see everything from, people can have a long conversational chat just trying to pass time, right? And in the Gemini app, you've seen early cases where people may get into it, in a therapy-like experience, right? So these are all emerging experiences of what people do. And I think this is why I'm glad we have both surfaces and we can innovate in both of these areas. And of course, there'll be areas which will be commonly served by both applications. And over time, I think we can make the experience more seamless for our users.
Thanks, Sundar.
Our next question comes from Mark Shmulik with Bernstein. Your line is now open.
Yes, thanks for taking the question. Sundar, it seems there's almost like a daily news report about, the AI talent war and high-profile folks moving around, which is kind of like your perspective and how you think Google's been doing it, both kind of attracting and retaining key AI talent. And along the similar lines, how do we think about AI-related resourcing costs alongside kind of the step up in capital investments required to go build for AI? Thank you.
Mark, on the first question, look, I think we've gone through these moments before. We've obviously always deeply invested in talent, including in AI talent, for well over a decade now. And I think we have an extraordinary both breadth and depth of the talent. In my experience, the top people look for a combination of they want to really be at the frontier driving progress. And so the mission and how state of the art your workers matters. So that's super important to them. Access to compute resources and access to your peers, right? Working with the best people in the industry. And it's a combination of all of that and using it to drive impact. And I think we are pretty competitive on all those fronts. And through this moment, we continue to. I look at both our retention metrics as well as the new talent coming in, and both are healthy. I do know individual cases can make headlines, but when we look at numbers deeply, I think we are doing very well through this moment. And we'll continue investing in the people and the talent and the compute needed to make sure we are set up well for the opportunity ahead. And maybe I'll pass it on to Anat.
Yeah, now the question on how we integrate this into our overall cost structure, and I've mentioned before, having the benefit of having the full stack includes research, which is our people, and one of our most critical resources. So we make sure that we invest appropriately to have the best, brightest minds in the industry sitting here at Google and advancing our innovation to customers. It is part of what you're seeing now in our operating expense line across the organization, but we're also working hard to offset not just growth and investment across the business, but also to ensure that we can allocate resources appropriately. So Sundar mentioned earlier, the use of AI tools within the company. So that's another area where we can drive efficiency across the business, is to use these tools internally in terms of how we run the organizations. And then we're continuing on the same efforts that I've talked about before with regards to running the company with a high level of discipline and execution and driving efficiency across the business.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Great. If I can ask two, that'd be great. So the first one's on search click-through rates as a driver of monetization. So you guys have done a great job over the past decade of driving better ad relevancy and higher click-through rates in search. Just curious, as we look forward and we see lower ad impressions per SERP and all these things that are changing with AI overviews and different AI search formats, how do you feel about your ability to drive CTR going forward? And then the second question is, it looks like you're now working with OpenAI for some aspect of cloud infrastructure. Just curious how that relationship might expand in the future. Thank you.
I can take the first one. Look, specifically referring to the AI overviews, if I understood your question correctly, Sundar mentioned it. They continue to drive higher satisfaction. They continue to drive higher search usage. They're scaling up very nicely, and they're actually working for our entire user base now, scaled to over 2 billion users in over 200 countries. So very happy with this development. But when it comes specifically to the monetization of it, we talked about it before. We see monetization at approximately the same rate, which gives us actually a really strong base on which we can then innovate and drive actually a more innovative and new and next generation ad formats. That's how we look at it at this moment in time.
On the second part, with respect to OpenAI, look, we are very excited to be partnering with them on Google Cloud. Google Cloud, is an open platform, and we have a strong history of supporting great companies, startups, AI labs, etc. So super excited about our partnership there on the cloud side, and we look forward to investing more in that relationship and growing it there.
Our next question comes from Mark Mahaney with Evercore. Your line is now open.
Okay, two questions, please. First, could you just describe, maybe, Philip, what you see in terms of the ad environment, maybe for the back half of the year, maybe versus last year? Does it seem as certain or as uncertain as it was last year? The results seem pretty strong. Are there any unusual concerns you would have for the back half of the year? And then, Sundar, I want to ask you again about the two surfaces approach to search. And you obviously you must have some internal metrics that tell you that's the optimal way for you to approach the market. But I'm sure there's a counter argument that just having that unified search and being able to discern the intent of the search, whether it's pure information or commercial, just from the query, that could give you a material advantage over other offerings in the market. Just talk a little bit about what metrics you've seen that make the two surface solutions seem to be optimal. Thank you.
So let me start. Look, we said our ads business performed strongly in Q2. Give you maybe some vertical color of it. In Q2, search and other performance was led by growth across all verticals. We mentioned the largest contributions from retail and financial services, which was primarily due actually to strength in insurance. We saw healthcare as a sizable contributor to growth as well. Look, we're only a few weeks into Q3, so I think it's really too early to comment on anything happened in the second half of the year.
Look, and Mark, on the second part of the question, look, I think between these two surfaces, you pretty much you're covering the entire breadth and depth of what humanity can possibly do. So I think there's plenty for two surfaces to tackle at this moment. Obviously, you are right. Search is more information focused. And we think of the Gemini app as more your assistant, a more personal, proactive, and powerful assistant for every aspect of your daily life. And so you can imagine wanting to code deeply or create a long video, etc. Like, those things can be done by the Gemini app today better. Over time, like we've always done, we've gone through these evolutions before. Like as you point out, we can understand user intent better and abstract some of the complexity for our users. At one point, people used to go to query separately for text, differently from images, differently from videos, etc. And we kind of made it all seamless with universal search. So we have the experience of being able to bring together experiences in a way that makes sense for users and do the heavy lifting for them. But I think, when you're in this early stage of new emerging paradigms, I think we want to make sure we can meet them where they're what they are expecting today, and over time, I think it'll give us an opportunity to serve them better. So I think that's how we are thinking about it.
Okay, thank you.
Our next question comes from Ken Gawrelski with Wells Fargo. Your line is now open.
Thank you very much. Two, if I may, please. The first on cloud, I'm just hoping maybe you could clarify your back half outlook. Given last quarter, you talked about some supply constraints that would ease towards the end of 2025, but yet you put up a really nice acceleration in 2Q. Now you're talking about some supply constraints easing into 26. If you could just clarify a little bit on the back half outlook for cloud, given the strong results in 2Q. And then the second is a bigger picture question, which is an agentic experience. Does it democratize the web like search did 2 decades ago, enabling discovery in the long tail? Or does it lead to more concentration with a smaller group of vertical winners? Would love it if you could opine on that. Thank you.
Okay, on your first question on the cloud second half outlook and the comments I previously made on with regards to where we're going to see the capacity increase. So obviously we're working hard to bring more capacity online, which means data centers and servers are coming online. And we see more of an increase towards the back end of the year. But we're increasing capacity with every quarter that goes by, as you can see with the growth rates we've had both this quarter and in the previous quarter. As Sundar mentioned earlier, this is not the type of investment that's a light switch. It takes time to make this investment. So what you're seeing now is investment we made some time ago that's now translating to additional capacity coming online, but more of that towards the back end of the year. I will say it's important as you think about cloud growth, not to think about this in a linear fashion, because the quarter-on-quarter growth rates could depend on the timing of capacity delivery and when that comes online. So that could move a little bit from quarter to quarter.
Look, on agentic experience, look, I think there was an earlier question on the technology aspects of it and how we are making progress. Obviously, there's the value proposition for all the players involved, and I think that's going to be an equally important thing to create the unlock here. And I do think, over time, users will, it's clear to me as we make progress on the agentic experience, it's going to be a much better experience for users, right? And so you'll find savvier players leaning into these experiences, and that'll help them grow and meet this moment. And I think, I do think it's an opportunity for some of the players. And so you are right, just like the early days of the web, there are aspects about it which will expand access, grow the use cases, etc. And I think that elements are there. But I do think it's important. It's not just a technology play, but we have to solve the business models for the varying players involved. So, and I think that's going to be an important part of this evolution as well.
Thank you.
And our last question comes from Justin Post with BAML. Your line is now open.
Great, thank you. A couple for Sundar. First, looks like the subscription businesses are all tracking well, and certainly Gemini 2.5 has got some much good reviews. how are you doing with Gemini subscriptions? I know it's a focus area for the company, and anything you can kind of do to accelerate the consumer subscriptions of Gemini within Google One. And then secondly, just on the course change of CapEx, obviously a bigger increase, which appears to be because of cloud demand, but just your comments on cloud ROI and I'm sorry, CapEx ROI. What gives you confidence that you're going to get good returns on that spend? Thank you.
Great. Look, on the first thing on subscriptions, we've definitely, Google One has been an attractive value proposition powered by storage, but with now our AI plans, including both Pro and Ultra, and particularly with the 2.5 series of models, we've definitely seen accelerated traction. So it was a very healthy quarter. And so we are definitely excited about the opportunities ahead. And you will find, through this moment, I think we'll be able to drive growth in that area based on our AI offerings. And so it's definitely an area we are both excited by, and we are actually seeing traction, particularly in the last quarter, ever since we introduced 2.5 Pro. So we are excited about the trajectory there. On the CapEx on the cloud side, look, I think we are definitely investing because we are delivering a lot of value through our cloud offerings. And I think it's important to understand, as we build more and more of an install base with Google Cloud, we have very high customer satisfaction. Our churn rates are very low, and we are much more efficient in the investments needed to grow those lines of businesses. So you're seeing all that play out in our margin trajectory, particularly if you look at it annually, sequentially over the past few years. So all that gives us confidence as we are investing in this. We'll be able to have a healthy ROI on our investments, and particularly in this AI moment. There's definitely the value we are delivering to the customers is also growing pretty significantly on a forward-looking basis. And so I think all that, will help us, do well here.
Thank you. That concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
All right. That is it. We got 3 minutes until Tesla. Jose, I think he's going to have to go, so he's not going to be able to stay for Tesla. But Jose, give me your raw thoughts on that call.
I mean, overall, it was great. We see some strong growth in the cloud. We see kind of that growth on the search. They mentioned some crazy amount of users using Gemini already. So again, maybe it wasn't the crazy numbers for a pump right after earnings, even though we are up a little bit after. I think for long-term investors, this is the type of earnings call you want. There's nothing that showcases that there's any major headwinds that I think we should be worried about.
Yeah, I thought it was a good call. Look, we got to 198 at one point, so we got a little bit of a pump, and then it kind of faded. It leads me to believe maybe tomorrow the street gets excited about what they saw. We went through the numbers already. Absolutely incredible. 450 million MAUs on Gemini. That's up from 400 million. 2 billion, I think is what he said, DAUs on search AI overviews. Like, the numbers were pretty damn good. Even Gene Munster, who is, I think he would even classify himself as a Google hater, he tweeted after hours and he said, hey, I think Google should be higher based on this report. So this was a good earnings. It's just a question of, how the street thinks of it long term.
And like you mentioned, I wouldn't be surprised if tomorrow we end up waking up to bullish analyst calls or price target upgrades for Google after this earning.
Yeah, agreed. All right, so we got Tesla soon, but while we're waiting for Tesla, which is literally in about a minute, maybe 2 minutes, Trump is live. Jose, thank you for being here. I'm putting Jose's Twitter in the chat. We will see you next time, Jose.
Thank you. Bye.
2,750 to 505. And that's why the map is almost completely red, except for a couple of little blue areas on each side of it. But it was a great experience, frankly, for me. And it was great seeing you again. Great couple. David Friedberg. And even, as we know, Jason Calacanis. I say even. Thank you, Jason. Thank you, Jason. I appreciate that. Yeah, he's a good person. Thanks as well to the Hill and Valley Forum and our future Undersecretary of State, Jacob Hellberg. Good work. Good. Stand up, Jason. Good. I met him a year and a half ago, and I was very impressed. I said, let's bring him in. We're bringing a lot of smart people. And David's been unbelievable as the job he's doing. Along with Secretaries Doug Burgum, who's been incredible. Doug? Thank you. Thank you, Doug. Great job. He's producing low-cost energy. We're down to $64. I want to get it down a little bit further if we can. I don't know if the oil companies love that or not, but we want to have very inexpensive electricity so that you can power up the plants, because you need more electricity than any human beings ever in the history of the world. When I heard what you really need, I said, you got to be kidding. Double what we produce right now for everything, right?
All right, Tesla's live.
Forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Travis.
Materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Travis. We've had a very exciting quarter. We're able to successfully launch Robotaxi, so providing our first drives with no one in the driver's seat with paying customers in Austin. And as some may have noted, we've already expanded our service area in Austin. It's bigger and longer, and it's going to get even bigger and longer. We were expecting to really greatly increase the Austin service area to well in excess of what competitors are doing. And that's hopefully in a week or so, a couple weeks.
Yeah, a couple of weeks.
A couple weeks or so. And then we're getting the regulatory permission to launch in the Bay Area, Nevada, Arizona, and a number of and Florida, and a number of other places. So as we get the approvals and we prove out safety, then we'll be launching autonomous ride-hailing in most of the country. And I think we'll probably have autonomous ride-hailing in probably half the population of the U.S. by the end of the year. That's at least our goal, subject to regulatory approvals. I think we'll technically be able to do it. So assuming we get regulatory approvals, it's probably addressing half the population of the U.S. by the end of the year. But we are being very cautious. We don't want to take any chances, and so we're gonna go cautiously. But the service areas and the number of vehicles in operation will increase at a hyper exponential rate. Some other notable things. Model Y in June became the best-selling car in Turkey, Netherlands, Switzerland, and Austria. It is, I believe, the best-selling car of any kind in the world still. Autonomy is a big factor there. So even without supervised, even with just supervised self-driving, it's a huge selling point. And it's worth noting that we do not actually yet have approval for supervised FSD in Europe. So our sales in Europe, we think, will improve significantly once we are able to give customers the same experience that they have in the US. This is, I think, a very important point to convey. And we've been working with our main country regulator, which is the Netherlands. And I think we're close to getting approval with the Netherlands. Then it's going to go to the EU. It's quite a, Kafkaesque. In fact, Kafka had no idea that something like the EU could exist. Beyond Kafkaesque challenges with bureaucracy, but we will get the approvals. And I think we'll get, some people in Europe will have an experience similar to that of the US. In most of Europe, this year, hopefully, at least partially in this quarter. And then we also had some regulatory challenges in China, which we're hoping to unblock shortly, because we also cannot provide supervised FSD in China currently. But we hope to unblock that soon. That's also that's another major. It really is the single biggest demand driver. And then within the U.S., as we get confident about safety in different geographic areas, we'll loosen up on how much somebody has to be laser focused, to have their eyes laser focused on the road. That's been a common complaint. In fact, it does create an odd safety issue where people will sometimes disengage autopilot, then do something, change the radio, or maybe look at the phone, drive with your knee, and then re-engage autopilot, which obviously is less safe than simply keeping autopilot on. So anyway, we're get that experience will improve in the next several weeks. Because of our focus on Austin with no one in the driver's seat, the production release of autopilot is actually several months behind what people experience on a robotaxi in Austin. So now we have the robotaxi in Austin launched. We'll be adding back those elements so that there will be a step change improvement in the autopilot experience for people outside of Austin. So this is really, as you can tell, this is very much sort of autonomy is the story. Like we need the physical product, without which you cannot have autonomy. But once you have a physical product, you need the autonomy is what amplifies the value to stratospheric levels. We also launched the Tesla Dyna, which has been a huge hit. It actually got worldwide attention, which is unusual for a Dyna. Dynas don't typically get headline news around Earth. But this is a pretty special Dyna, and if you're in the LA area, it's worth visiting. It's sort of a shiny beacon of hope in an otherwise sort of bleak urban landscape, frankly. So it's really quite a lovely experience. Great job by the Tesla team there. On the full self-driving front, continue talking about that. We're continuing to make significant improvements just with the software. So we're expecting to increase the parameter count. Actually, at this point, I think we can probably 10x almost 10x the parameter. Yeah, roughly 10x the parameter count. So this is actually a very tricky thing to do, because as you increase the parameter count, you get choked on memory bandwidth. But we currently think we can 10x the parameter count from what people are currently experiencing. So not just a 4x, actually 10x increase in parameter count. Yeah, so there's still a lot of improvement on the existing hardware to happen. Energy is growing really well, despite headwinds from tariffs and various supply chain challenges. The Megapack is expanding capacity quickly, and we have upgrades to the Megapack that will make it even better. And we had record Powerwall deployments again in Q2. So I think batteries are just going to be a massive thing. The scale of battery demand is, I think, not that many people appreciate just how gigantic the scale of battery demand is. The way to think about it is that the U.S. sustained power output for the U.S. grid is around 1 terawatt, but average usage is less than half a terawatt. If you add batteries to the mix, you can run the power plants 24/7 at full capacity, thus more than doubling the energy output per year of the United States, just with batteries. But that's again, big deal. It's a really big deal. Optimus. So we're evolving the Optimus design and really getting Optimus to the point where it is a phenomenal design. So we're on Optimus version 2 right now, sort of 2.5. Optimus 3 is an exquisite design, in my opinion, and will be an incredible. As I've said many times before, I predicted it will be the biggest product ever. It's a very hard problem to solve. You have to design every part of it from physics first principles. There's nothing that's off the shelf that actually works. So you're going to design every motor, gearbox, power electronics, control electronics, sensors, the mechanical elements. We've also got to train Optimus to use its limbs and its sensors with a neural net. But we'll be applying the same techniques that we've applied for a car, which is essentially a four-wheeled robot, and Optimus is a robot with arms and legs. So the same principles that apply to optimizing AI inference on the car apply to Optimus, because they're both really robots in different forms. And Tesla, it is important to note that Tesla is by far the best in the world at real-world AI. Like a clear proof point for that would be if you compare, say, Tesla to Waymo. Waymo's got, the car is festooned with God knows how many sensors. And yet, isn't Google good at AI? Yes, but they're not good at real-world AI. Thus far, Tesla is actually much better than Google by far, and much better than anyone at real-world AI. And by far, Tesla has the best inference efficiency. I think a key figure of merit for AI is what is the intelligence per gigabyte? And people talk about parameters, blah blah blah. But I think we'll stop talking about parameters and talk about gigabytes, because with the parameters you can have 4-bit parameters, 8-bit parameters, 16-bit parameters, but the actual constraints in the hardware are how many gigabytes of RAM and how many gigabytes per second can you transfer from RAM. Therefore, it is not a parameter constraint. It is a byte constraint. And Tesla has the highest intelligence density of any AI by far. And I have a lot of insight into this with xAI. xAI is, Grok is the smartest AI overall, but it's Grok 4 is a giant beast. Sort of at the terabyte level. So just kind of important to note, Tesla has the best intelligence density. And intelligence density will be a very big deal in the future. It is now. So with Optimus 3, which is really the right design, it's like it doesn't have, at this point, there's no significant flaws with the Optimus 3 design. But we are going to retool a bunch of things, so it'll probably be prototypes of Optimus 3 into this year, and then scale production next year. I'm going to try to scale Optimus production as fast as it's humanly possible to do so, and try to get to 1 million units a year as quickly as possible. I think we can get there in less than 5 years. That's my sort of, I guess. That's a reasonable aspiration, is 1 million units a year. 5 years. It seems like an achievable target. But in conclusion, so far 2025 has been a very exciting year. A lot of major milestones. We've made clear, demonstrable progress in autonomy that a lot of naysayers said we would not achieve. But it's worth noting that we have done what we said we were going to do. Doesn't mean we're always on time, but we get it done. And our naysayers are sitting there with egg on their face. So great progress by the Tesla team. Yeah, I do think if Tesla continues to execute well with vehicle autonomy and humanoid robot autonomy, it will be the most valuable company in the world. It's a lot of execution between here and there. It doesn't just happen. But provided we execute very well, I think Tesla has a shot at being the most valuable company in the world. Anyway, obviously, I'm extremely optimistic about the future of the company. Best way to predict the future is to make it happen, and we're making it happen here with the Tesla team. So I'd just like to say thanks to all of our supporters, and I think we're good for today. Yeah, an incredibly exciting future.
Great. Thank you very much, Elon. And Deadlock has opening remarks as well.
Travis, as Elon mentioned, Q2 was an interesting quarter in a few respects. We started ramping up the production of the new Model Y at all our factories. We rolled out our robotaxi service in Austin and delivered a car completely autonomously directly from the factory to the customer's home. It is a seminal point to get to this thing. I mean, it took a lot of effort, and I really want to thank everybody at Tesla to make this happen. It wasn't an easy thing to do, but we did it. It took time, but we've just begun the next phase for the company. The one big bill has a lot of changes that would affect our business in the near term. The first among those changes is the repeal of the IRA EV credit of $7,500 by the end of this quarter. Given the abrupt change, we have limited supply of vehicles in the US this quarter, as we have already within lead times to order parts to build cars. We've rolled out all our planned incentives already and will start paring them back as we start to sell them. If you're in the US and looking to buy a car, place your order now, as we may not be able to guarantee delivery for orders placed in the later part of August and beyond. The bill also made changes to certain emission standards by reducing the amount of penalty to zero. This in turn will have an impact on the new sales of regulatory credits to other OEMs, and in turn will lead to lower revenues. While we never plan our business around such sales, it will nonetheless impact our total revenues going forward. On the automotive product portfolio, the entire lineup is updated. Globally, we're seeing an increase in the number of test drives. We started the production of the lower cost model as planned in the first half of 2025. However, given our focus on building and delivering as many vehicles as possible in the US before the EV credit expires, and the additional complexity of ramping a new product, the ramp will happen next quarter, slower than initially expected. One thing which is grossly underappreciated, and Elon talked about it, is that all our vehicles in the lineup are capable of autonomy. This is by far the biggest differentiator between us and the competition. Our vehicles top safety standard as is, but with FSD, they are and will continue to set a new standard for safety within vehicular transportation. We published our vehicle safety report earlier today, and you can see a car on FSD is 10x safer than a car not on FSD. We've started seeing an uptick in FSD adoption in North America in recent months, which is a very promising trend. And just to give you perspective, since the launch of, since we moved to version 12 of FSD, we've seen the adoption rates really increase. We've started seeing on the automotive revenue front, despite reduction in regulatory credit revenue, and the total automotive revenue increased by 19% sequentially, even though total deliveries only improved 14%. This was primarily due to an improved ASPs because of the new Model Y. This helped in improving margins sequentially as well, along with improved mix and higher fixed cost absorption, despite an increase in costs from tariffs. We started seeing the impact of tariffs in our P&L. Sequentially, the cost of tariffs increased around $300 million, with approximately 2/3 of that impact in automotive and rest in energy. However, given the latency in manufacturing and sales, the full impacts will come through in the following quarters, and so costs will increase in the near term. While we're doing our best to manage these impacts, we are in an unpredictable environment on the tariff front. The margins for the energy generation and storage businesses improved sequentially, while deployment reduced, primarily due to the ramp of power deployments at higher margins. We were able to achieve our highest gross profit for the business yet. Note that the overall deployments will continue to vary quarter to quarter. I think Elon covered this, that industrial storage will make a difference in this drive towards AI and data center growth. The energy requirements are increasing at a rapid scale as AI applications are very energy hungry. The quickest path to scale up energy is deploying storage. This is something that our customers have started realizing, and despite this business having the largest impacts from tariffs, we're seeing customers willing to accept some of the tariff impacts. The big bill has certain adverse impacts even for the energy business, most notably on the residential storage business due to the early expiration of consumer credits by the end of this year. The challenges of the storage business therefore remain both from the bill and from tariffs, and we're doing our best to try and manage through this, but we will see shifts in demand and profitability. The margins for our service and other businesses improves sequentially, primarily due to higher profits from supercharging and improvement in insurance and service center profitability. Operating expenses also grew sequentially as we continued our investment in AI projects, including additional expenses related to employee-related costs, including higher stock-based compensation and depreciation for AI compute. Our operating expenses, especially R&D related spend, will continue to grow. We believe even in the current environment, it is the right strategy to keep making investments in these areas to position us for the long term. Other income grew sequentially, primarily from the mark-to-market adjustment on Bitcoin holdings, which was $284 million gain in Q2, while we got $125 million loss in Q1. Just want to remind people that this would keep creating volatility based on the Bitcoin pricing. While operating cash flows increased sequentially, so did our CapEx, resulting in $146 million of free cash flow. We continue to make investments in various aspects of manufacturing, like the Cybercab, semi lines, and other manufacturing spend, and the expansion of our AI initiatives. Our latest expectation for the year in terms of CapEx is in excess of $9 billion. To summarize, we have near-term challenges in our business due to the negative impacts of the bill and tariffs. However, the investments that we have made for AI, robotics, and our lead in energy sets us up for a bright future. I would like to thank the whole Tesla team, our customers, our investors, and supporters for their continued belief in us.
Great. Thank you very much, Vaibhav. So now we're going to move on to Say.com questions. The first question is, can you give us some insight how robotaxis have been performing so far and what rate you expect to expand in terms of vehicles, geofence, cities, and supervisors?
All right, Q&A.
Yeah, robotaxi has been doing great so far in Austin. Customers really love the experience. It's like super smooth, very safe, and like just a great experience overall. And we already did the first wave of expansion in Austin, and we'll continue to expand in Austin to probably more than 10x our current operating region. We're also testing in a lot of other cities, as Elon mentioned. The next thing to expand would be in the San Francisco Bay Area. We are working with the government to get approval here, and in the meanwhile, launch the service with the person in the driver's seat just to expedite and while we wait for regulatory approval. We're also testing a lot of other cities in the US, including Florida, Nevada, etc.
Great. Thank you very much, Ashok. The next question is, what are the key technical and regulatory hurdles still remaining for unsupervised FSD to be available for personal use? Can you provide a timeline?
We're certainly getting there. I think it'll be available for unsupervised personal use by the end of this year in certain geographies. We're just being very careful about it. So.
This is not something which we want to rush.
No.
We want to make sure that everything is safe before we make it available broadly.
Yeah, we're just being extremely paranoid.
Yes.
But I'm confident that by the end of this year, within a number of cities in the U.S., it'll be available to end users.
Yeah, and for what it's worth, the same AI hardware in the Austin robotaxi vehicles has some customer vehicles, and we did deliver a car autonomously from the factory to a customer this quarter.
Yes.
And every Tesla manufacturer in the US and in Europe autonomously drives itself from the end of line to the loading docks. And so it's just a software upgrade away.
Yeah. I think we'll end up delivering cars in the greater Austin area and the Bay Area by default from the factory by the end of this year. Like a car will deliver itself to where you are, unless you say you don't want that.
It'll be super cool.
Yeah.
Great. Thank you, guys. The next question is, what specific factory tasks is Optimus currently performing, and what is the expected timeline for scaling production to enable external sales? How does Tesla envision Optimus contributing to revenue the next 2 to 3 years?
It's a big question.
Yeah. So the Optimus 3 design, as I mentioned earlier, is I think finally the right design. There'll be further optimizations, but there are no fundamental changes that are needed for the Optimus 3 design. It has all the degrees of freedom that you really want or need. So we'll have prototypes of that in, I don't know, 3 months, and then start tooling up production. We'll certainly start production on that in the beginning of next year. The production ramp is difficult. It's always difficult to predict the S-curve of your production ramp when something has got when everything is new, because the rate of production will move as fast as the least lucky and least competent element of the entire supply chain, as well as in internal processes. So the more new stuff that is in a product, the slower the ramp could be because of unexpected supply chain interruptions or mistakes made internally. It's much easier to predict sort of the end of the S-curve or late in the S-curve than the beginning of the S-curve. And the beginning of the S-curve of the production ramp is in any case not really material for revenue purposes. The beginning of the S-curve, you're always negative gross margin. and you're debugging a lot of issues. So that's why like I feel like fairly confident in predicting things, or at least medium confident in predicting where we are in 5 years, but it's hard to predict where we are in a year or 2 years. So that's why I think 5 years, I think we could be at the, let me put this way, I'd be surprised if at the end of 5 years, 60 months from now, if we are not roughly making 100,000 Optimus robots a month in 60 months, I would be shocked.
All right. Thank you very much. Next question is, can you provide an update on the development and production timeline for Tesla's more affordable models? How will these models balance cost reduction and profitability, and what impact do you expect on demand in the current economic climate?
Well, I think Vaibhav did a good job of answering this question in his opening remarks. As we said, we started production in June, and we're ramping quality builds and things around the quarter. And given that we started in North America, and that our goal is to maximize production with a higher rate cliff ending in Q3, we're going to keep pushing hard on our current models to avoid complexity. Then, fortunately, when that rolls away, we'll be ready with the new, more affordable models available for everyone in Q4. And the goal with those products was not to negatively impact revenue or gross margin, but just to make a car that everyone loves and wants at a more affordable price.
Great. Thank you, Lars. The next question is, can you talk about the benefits of Tesla investing in xAI?
This is not the forum to discuss this topic. I mean, if there is something which we need to discuss, we'll discuss it separately.
What do you mean this is not the forum?
We're a publicly traded company. Shareholders are welcome to put forward any shareholder proposals that they'd like. I've recently encouraged that. And then have shareholders vote, and we'll act in accordance with the shareholder wishes.
That's nonsense.
Thank you
That
very
is
much.
nonsense.
The next question is, can you tell us a little bit more about what goes on in the Tesla design studio?
Do you want me to take that one? We kind of generally say that what happens in the studio stays in the studio, and that earnings calls are not the place to disclose new product stuff. But we're working to make sure that we have an exciting future for our Tesla in the product lineup.
Yeah, there's a lot of exciting things happening in the design studio. It's not like static. And really what's going to happen over the next several years is a fundamental transformation of the company from a pre-autonomy world to a post-autonomy. And I'm working on a new master plan to articulate that Tesla team. And there will be some teething pains as you transition from a pre-autonomy to a post-autonomy world. But I think the future vision for Tesla is incredibly exciting, and will profoundly change the world in a good way. So you sound like sort of painful or whatever, but I think let's just say if we execute on that plan effectively, which is you have to actually do that, Tesla will be the most valuable company in the world by far.
Great, thank you. The next question is actually a duplicate on unsupervised FSD for customer vehicles, so we'll skip that. After that is, are there any news for Hardware 3 users getting retrofits or upgrades? Will they get Hardware 4 or some future version of Hardware 5?
I mean, what we want to do is we want to get unsupervised done on Hardware 4 first. Once it's done, then we'll go back and look at what we need to do with the Hardware 3 cars. I mean, like I said, the focus is first to get unsupervised out, and then we'll go back and see what more work we need to do.
Great. The next question is, can you give an update on Dojo, and could xAI be a customer for Dojo?
Dojo 2, we expect to have Dojo 2 operating in scale sometime next year. With scale being somewhere around 100K H100 equivalents. And then AI5, which is really a spectacular chip. I don't use those words lightly. It's spectacular chip. The AI5 chip will be hopefully be in volume production around the end of next year. That has a lot of potential. I think, thinking about Dojo 3 and the AI6 inference chip, it seems like intuitively we want to try to find convergence there, where it's basically the same chip, but is used where we use, say, 2 of them in a car or an Optimus, and maybe a larger number on a board, a kind of 512 on a board or something like that. If you want high bandwidth communication between the chips at a forced serving, doing inference serving, that sort of seems like intuitively the sensible way to go.
Great. The next set of questions have all actually been covered. So we'll end with how will the BBB elimination of tax credits for solar projects affect your sales pipeline for Megapack?
Yeah, our sales pipeline is quite diversified across customers and market segments. So we aren't heavily weighted in Megapack projects that are paired with solar. And as we talked about in the opening remarks, we're seeing storage quickly being recognized for its ability to unlock grid efficiency and how quickly it can be deployed to help the grid. Additionally, although the recent bill was not favorable towards solar, we believe solar projects will still get built because the energy is necessary, the projects are well developed, and they're ready for execution. And there's really no alternatives in the near term given gas turbine lead time and pricing. We also continue to see growth in the data center segment and in standalone storage projects providing capacity to the grid in several markets across the US. Overall, we're forecasting a very strong second half of the year as we increase deployments. And lastly, we continue to invest heavily in US manufacturing to mitigate policy and tariff impacts, expecting our first LFP cell manufacturing facility to be online by the end of the year and launching our third Megafactory near Houston in 2026.
Great. Thank you, Mike. We will now be moving to analyst questions. The first question comes from Emmanuel Rosner at Wolfe Research. Emmanuel, please feel free to unmute yourself whenever you're ready.
Great. Thank you so much. Can you hear me?
Yep.
Thanks. So Elon, are you able to share any KPIs with us in terms of the robotaxi business? How many vehicles are you operating, miles driven autonomously, or the number of safety critical intervention? Just curious, how the rollout it generally is going and any sort of like targets that you could share more broadly.
Sure.
Yeah, we have more than 7,000 miles operating in Austin area. It's just because service is new, we have a handful of vehicles right now, but then we are trying to expand the service in terms of both the area and also the number of vehicles both in Austin and other locations. So far, there's like no notable safety critical incidents. There, sometimes we have our own restrictions as to, for example, we restrict our speed limit to 40 miles per hour roads. And if the vehicle wants to go on like higher speed roads, we can stop the vehicle, but those are out of convenience as opposed to safety critical nature. So far, the service has been really well received, and we continue to expand on it.
Great. And then, longer term, from an economics point of view, longer term, you've previously talked about working to drive down the cost per mile on robotaxis, maybe towards 30 or 40 cents per mile over time. Now that your service is live, how should we think about the main milestones to getting there?
Yeah, well, the Cybercab which is really optimized for autonomy. That I think has got probably sub 30 cent per mile potential over time, maybe 25. It's really if you design a car from scratch to be a cost optimized robotic taxi like Cybercab, you like, for example, we're not trying to make it, corner like incredibly well like a Model 3 would, or Model S or even Model Y. Like it's got model. All of our cars that are driven by people are super fun to drive. They've got incredible acceleration, the incredible cornering capability. But we're confident that very few people in a Cybercab want to be hurtling around. So we reduced the top end speed, which means we can use more efficient tires. We don't need as much acceleration. We don't need as much, big brakes to sort of. We want stopping distance, but we're not expecting it to be heavily used. It's a gentle ride. Essentially, if you design it for a gentle ride, and then you have a much more optimized design point. So that's why it seems probable that we could achieve that, especially if Optimus is, serving, cleaning up the car and doing maintenance and stuff. Doing automatic charging. So I think it's the actual cost per mile of Cybercab will be very low. The cost per mile of our existing fleet will be higher, but still very competitive. So, maybe some number of 50 cents, I'm just guessing. So this really, Tesla's road taxi fleet will go from tiny to gigantic in terms of operations in a pretty short period of time. Like my guess is it has a material impact on our financials around the end of next year.
Great. Thank you very much. The next question comes from Adam at Morgan Stanley. Adam, please unmute yourself.
Great. Hello, everybody. So Elon, as Tesla moves into this next phase of physical AI, autonomous humanoids, robotaxis, etc., world-changing, civilizational species-changing technology with dual purpose, are you comfortable moving Tesla in this direction while only having a 13% stake in the company? Is that sustainable, or do you still insist that something needs to happen given your current lack of control and the types of technologies you're getting into?
Yeah, that is a major concern for me, as I've mentioned in the past, and I hope that is addressed at the upcoming shareholders meeting. It is a big deal. I want to find that I've got so little control that I can easily be ousted by activist shareholders after having built, this army of humanoid robots. I think that, as I mentioned before, I think my control of Tesla should be enough to ensure that it goes in a good direction, but not so much control that I can't be thrown out if I go crazy.
Okay, Elon, you're not going to go crazy. We trust you.
Well,
you can stay a little crazy. A little crazy is okay.
Bro.
Elon, though, we understand the board of directors of a major U.S. investment bank recently toured Optimus production. I don't know if you want to confirm that or not. It's just what we've heard. That's cool. But when do you think others will be able to get a firsthand view of Optimus like that? And is the second half of this year too soon to have an AI day? Because it seems like everybody else in the world's doing it, and this talent war is getting freaking crazy. And I know you mentioned for recruiting purposes, this is a very important thing that you've done. I think people have copied you on this, and I'm wondering if this year's too early for that. Thanks, Elon.
Yeah, it's a bit of a tough thing because when we're doing AI day, we find that some of our competitors have literally done a frame-by-frame examination of our slides and everything we say, and then copy us. So, I'd say what's the trade-off? It does help with recruiting, but then competitors look very closely and copy us. I mean, that said, we should probably, I mean, I guess we could consider the shareholder meeting to be sort of we can maybe go into depth, some amount of depth at the annual shareholder meeting with respect to Optimus and AI and sort of our chip stuff, perhaps. Yeah, Tesla's also really underrated in terms of AI chip design, as well as AI software. So, like, there's still not a chip that that exists that we would prefer to put in our car. That is an AI chip that we would prefer to put in the car over our own. And even though it's been now out for several years, and we're confident that the AI5 chip will be a profound game changer. In fact, it's so powerful that we'll have to nerf it to some degree for markets outside of the US because it flows way past the export restrictions. So unless the export restrictions change, we actually will have to nerf our AI5 chip, which is kind of weird. Hopefully we keep raising the bar on export restrictions. Otherwise, it gets a bit silly. But we'll have a bunch of Optimus robots on stage at the shareholder meeting. The Optimus Lab is cool to see. It basically looks like the set of Westworld. You could robots in various stages. Some of them are, in various stages of repair. Like, I don't know, so some combination of like the Tatooine junkyard and Westworld. That's what it looks like. It's very cool. And Optimus is walking around the office here in Palo Alto. So just 24/7 is just walking around like it's normal. And you saw Optimus, like, the Tesla diner serving popcorn. Yeah, so we'll go from a world where robots are rare to where they're so common that you don't even look up.
Great. Thank you so much. The next question comes from Edison at Deutsche Bank. Edison, please unmute yourself. Edison, please go ahead and unmute yourself.
Bro is sleeping.
Right, while Edison figures that out, we will go to the next question, which is going to come from Dan Levi at Barclays. Dan, please go ahead and unmute yourself.
Great, thank you. Elon, you've talked about the opportunity to put non-Tesla owned vehicles into the robotaxi network. Just talk about the gating factors to enabling that and what timeline we should expect on personally owned vehicles in the robotaxi network.
We haven't really thought hard about that. Like, we need to make sure it works when the vehicles are fully under our control. Yeah, it's kind of one step at a time here. We don't want to jump the gun. As I said, we're being paranoid about safety. So it's like, but I guess it would, like, next year is, I'd say confidently next year. I'm not sure when next year, but confidently next year, people would be able to add or subtract their car to the Tesla fleet.
I mean, one thing to keep in mind is that we will have some criteria, because, like, even when you put your car in an Uber or Lyft fleet, they go through a whole checklist process of making sure things are working.
It's like an Airbnb or
Yes.
that, yeah.
Yeah, so we will do something like that.
Kind of vetting process.
Yes. Because we want, like Elon said, we want to be paranoid about security. I mean, assets, small things like tread on the tire can have an impact on safety. So that's why we would want to do some proper validation before we let other cars come in.
Dan, do you have a follow-up?
Yes, thank you. Could you just unpack the different costs associated with scaling the robotaxi business and how you think about funding those costs. Are the cash flows in the auto business sufficient to fund it? And if not, what other funding sources do you think you'd use? Would you just fund it off the balance sheet?
Well, as soon as there is a clear cash flow stream associated with any product, you can debt finance it.
And in the interim?
In the interim, we will use our balance sheet, but once we get to a certain scale in terms of recurring revenues, like Elon said, we could get into easily a BS kind of transaction to try and get funding.
Great. Thanks so much. We will now move on to Mark from Goldman Sachs. Mark, please feel free to unmute yourself.
Yes, good afternoon. Thank you very much for taking the questions. With the FSD trials that Tesla has been offering to consumers and the attention on self-driving more generally, are you able to comment more specifically on what you're seeing with FSD subscription trends and take rates, and help us better understand how large FSD revenue may be currently?
So we've definitely, like I mentioned it in my opening remarks, since we've launched version 12 of FSD in North America, we've definitely seen a marked improvement in the FSD adoption. And the other thing which we had also done last year is we did bring down the pricing, and we made subscription much more affordable. So we have seen 25% increase since that time. So, which is an encouraging trend. But honestly, we've just started the story around explaining the benefits of FSD. Like I said before, we released our vehicle safety report. Even if you don't believe in this, anything else, a car on FSD being 10x safer should be a motivator. Plus, the other thing is, people don't realize even at $99 a month, it's like you're getting a personal chauffeur for almost $3.33 a day. And this is by far the biggest game changer, which I know we've been talking about it because part of it is we live and breathe it, but I feel
most people still don't know.
Yeah.
The vast majority of people don't know it exists. And it's still like half of Tesla owners who could use it haven't tried it even once. They don't actually realize that. Obviously, this is something we want to educate them on. So we've got to, when they come in for service, we'll reach out to them, send them like videos of how to make it work. It's such a shocking thing. They don't think a car is capable of this. So you have to show them and get them comfortable with turning it on and off. It's so trivial, but it's like saying you've got a cat that can sing and dance, but it just looks like a normal cat. And you're like, until you see the cat sing and dance and talk, you assume it's just a cat. That's Tesla FSD.
Yes.
Our car is intelligent.
And so what we're going to do, to Elon's point, we've been giving people free time to try the FSD, but we'll start giving more prompts to say, okay, this particular drive, try FSD. So that, because it's literally seeing is believing. Like Elon said, think of it like a cat. It looks like a normal cat, but this cat can sing and dance.
Yeah.
Same thing on FSD.
Great, yeah. And the 25% comment was 25% increase in the penetration rate since we've seen the release of V12 and V13 in North America. Great, thank you. Mark, did you have a follow-up question?
Yeah, thanks, Travis. Tesla has historically said it would use pricing as one tool to help drive auto vehicle growth as long as free cash flow stayed positive, given the ability to monetize products like FSD. I'm curious how you're thinking about pricing from here as a potential tool to drive increased volumes, given where you stand with FSD, as well as the fact that the IRA purchase tax credits are poised to go away in the US starting in the fourth quarter. So should we expect more meaningful price reductions given that monetization potential, or do you envision price reductions being more limited compared to cost downs given where free cash flow now stands? Thanks.
Well, we're in this like weird transition period where we will lose a lot of incentives in the US. We still have incentives actually in many other parts of the world, but we'll lose them in the US. But we'll still look at the relatively early stages of autonomy. On the other hand, autonomy is most advanced and most available from a regulatory standpoint in the US. So, I mean, does that mean like we could have a few rough quarters? Yeah, we probably could have a few rough quarters. I'm not saying we will, but we could. Q4, Q1, maybe Q2. But once you get to autonomy at scale in the second half of next year, certainly by the end of next year, I think I would be surprised if Tesla's economics are not very compelling.
3/4 of potential weakness.
The next question is going to come from Will from Truist. Will, please feel free to unmute yourself when you're ready.
Great. Thanks so much for taking my questions. First, I'd like to ask for a little bit more detail about the lower cost model that you talked about having, I think, started production in the first half, but you said will ramp later. At the last Analyst Day, as I recall, you talked about some aspects of this, like 2/3 or 3/4 reduction in silicon carbide and not using rare earths in the motor and perhaps other cost downs. You also had this unboxed architecture that I think you said would not be part of this sort of interim approach. Can you update us on what we should expect this thing to actually look like?
Well, we won't get into the looks because
What's like a Model Y? Yeah. Just lift the cat out of the bag there. Dancing cat that can sing and dance, but it can talk and sing and dance though. That's the cool part. Yeah, I mean, fundamentally the biggest obstacle remains that people just don't have enough. Some people don't. The desire to buy the car is very high. Just people don't have enough money in the bank account to buy it. Literally, that is the issue. Not a lack of desire, but a lack of ability. So the more affordable we can make the car, the better. I think it's going to be. It will be a very big deal when people can release their car to the fleet and have it earn money for them. Which, like I said, I feel confident in saying that'll happen next year in the U.S. at least. And in the U.S. we're legally allowed, appropriate disclaimers, and that'll make the affordability dramatically greater. Just like if you have an Airbnb and you can rent out your home when you're not there, or rent out a guest room or guest house or something like that, the affordability of your home is much greater.
Okay. Trying another topic then. We see all these wonderful developments at xAI like Grok, and obviously Tesla's trying to do quite a bit in AI. Elon, how do you manage the division of efforts and recruiting and talent and capital between these two that seem like there's a very high potential that they can in fact compete?
Well, they are doing different things here. The xAI is doing like, terabyte scale models and multi-terabyte scale models. Tesla's 100 times smaller models. So one's real world AI and one's kind of, artificial superintelligence type of thing. Really kind of the genesis for xAI was that there were certain people who simply would not join Tesla, AI engineers, because they wanted to work on ASI, and they would join Tesla. And I was like, well, maybe they'll join a new company. No, I think the Tesla problem is extremely important, but not everyone agrees with me on that. And so rather than have them join, OpenAI or Google or some other company, it's like, might as well have them create a company in that regard for it, which is xAI. So that's people can make a decision. Do they want to work on It's like super intelligence at data center or real world AI. It's kind of they're both compelling problems, but some people want to work on one, and some want to work on the other. Yeah.
Great. And unfortunately, that is all the time we have today. Thank you everyone so much for your questions, and we will see you next quarter.
All right. That was the Tesla Q2 2025 earnings. They left us with a negative 4% move, 4.6317. Tesla was at these levels a week ago, so it's not like we haven't seen this anytime in the past couple weeks. But the point is, it is definitely getting hit after hours. Google green 2% after hours, while Tesla's red. I'm going to give a call to Tanner because he is also streaming this and get his take. I have some thoughts, very curious for what other people think. But this wasn't the best call. Let's just say that. This wasn't the best call. Tanner, how are you?
What did we just listen to?
We listened to the Tesla Q2 2025 earnings, bro. That's what we just,
I don't know. I think I needed some sleeping pills or whatever the heck Elon was on, because that was brutal, dude.
Okay, so Tanner's streaming live, so hello to Tanner's audience. Tanner is live with me now on my channel. I want to ask you some questions. You can ask me some questions, but in general, forget the numbers, the energy in the call. What was your take from the beginning to the end on how you thought Elon was energetically?
They were talking about the Tesla diner before they were talking about Optimus, or like it was all scrambled. They were talking about Grok at one point. He was going off about Grok. It's not even the right company. That's not owned by Tesla. So it was a very scrambled call. But the worst part, I thought the absolute worst part, I've been listening to a lot of earnings calls. I don't know how many. It's in the hundreds, okay? The fact that we're listening to a call where they're saying to the shareholder base, this is not a customer base, this is a shareholder base, and they're saying, hey, make sure you get your car orders in because, the prices are about to go up and we can't offer you the 7,500 anymore. Unbelievable. This is not a car commercial, okay? This is an earnings call. Talk about your earnings. It was a bad look. But I'm curious your thoughts. I'm in a very biased moment right now.
And it wasn't just me, right? I think you tweeted that you could barely hear Elon. It's like the mic wasn't near him or something.
Yeah, it was a quiet call. It was a quiet call. At some points, he was jumbled all over the place, and then you hear sometimes like analysts would jump on, and it would be super loud. So it wasn't I don't know. Elon was loud in certain moments, but I don't know if they were just positioned far away. But it made for a very hard listen. It'll have to be one that I read back for sure.
I will say this. The numbers were we all knew the numbers were going to be so there wasn't any crazy surprise. Free cash flow was down a decent chunk, 89% year over year. So there's some nuances to that. But I think and I've said this before, and I think you would concur, the only reason this stock is trading at $1 trillion valuation is because of Elon Musk. And so for anyone saying Elon needs to leave or get out, I mean, go ahead, because maybe this thing is not worth more than $50 if he's not there. And I bring that up to say, if he's the reason it's at $1 trillion because of pure grit and sentiment and just how he makes people feel, this was not one of those calls where he made people feel, at least he didn't make me feel excited about Tesla. Now, granted, I'm bullish long-term. So quite frankly, if this thing drops to 280, I would not bat an eye. I'd be very happy to buy more shares under 300. However, for the people that have been heavily allocated to this for the past 5 years, for the people that have a majority of their portfolio in Tesla, I don't think this was the most exciting call for what Elon could have said for the future. I think the major questions about autonomy, unfortunately, were just not answered in a way that got people excited. I mean, and every time they brought up a specific about autonomy, they kind of just didn't give an answer, right? Or they said it's up to regulations. We don't really know. It's about the future. Elon kept touting that if we solve autonomy, we will be the world's most valuable company, which I think all of us already know. Right? Or at least there's some level of belief that they could become a very valuable company. I don't know if the world's largest, but they could be if they solve it. So I think it was a lot of hopium that wasn't even backed by energy. Like if you're going to give hopium, sure, but there was no energy across the CFO or the CEO, and I think that was my biggest critique of this call.
Yeah, yeah. No, I like there is a price to buy Tesla. I'm not anti-Tesla to a point where I don't think that this is a company not worth owning. But if you're going to pay an extreme valuation, I want to see some great numbers, some great enthusiasm, and statistics that I'm going to believe. I mean, this idea that you're going to bring autonomy to half the U.S. population by the end of the year. How?
Okay, yeah.
How,
Okay,
bro?
can we talk about that? What the hell? What is he talking about when he says that? Like,
yeah, you're putting LiDAR systems to reach out further in Austin with safety drivers and videos that are coming out where it's acting in extremely strange ways. You're not going to be putting this in personal cars with no safety drivers throughout half of the major cities in America in less than 5 months.
yeah,
I don't know.
I thought that was a bit confusing. I mean, when I heard that, I was just like, by the end of the year? And it's like, it just feels unlikely that's going to happen. He also said, if we're not making 100,000 Optimus humanoid robots a month in 60 months, I would be shocked. So in 2027, or last call, he said by 2027, we'll do 1 million bots. At least that was the rough target. Now he's saying by 2030, we should be doing 100,000 bots a month, which would be...
Okay, wait. Explain that to me. Break down the numbers again. So it got worse or it got better?
It got worse in terms of the timeline. So he said he said Tesla's on the track for 1 million bots by 2027. This time he said in 60 months, so 5 years from now, which would be 2030, he would be shocked if we're not making 100,000 humanoid bots a month, which would basically be 1.2 million. So he basically shifted it 3 years from 2027 to 2030, which I think, realistically, I don't even know if it's going to happen in 2030. But that was, I mean, one of the things I think people are hoping is that Optimus could be some type of a surprise. I think we got no update, no meaningful update from Optimus, other than, they're working hard on bringing it to the world, but it's not prime time yet.
Yeah. I'm surprised how under wraps this new, cheaper model is and everything. It makes me not as hopeful. If they push that a little bit harder, I also think that they could expand the multiples or people's hopes in the company right now, but I don't know. Overall, what did you think about Google, though? That was a lot less disappointing. I mean, the difference in Tesla stock down now 4.7%, 4.8%, and Google, which actually was dropping immediately once the earnings came out on free cash flow numbers, but turned around pretty quickly.
Real quick before Google, I do want to say the question about XAI, I was very disappointed in. I don't know if you feel the same, but when they said, hey, a retail shareholder asks, because they use Say Technologies, owned by Robinhood, by the way, Tanner knows that already, around, hey, when will Tesla investors get a chance to invest in XAI? And Elon's response was better than the CFO's response. The CFO was like, this is not the forum to discuss that. And I'm like, what? Elon?
That was so funny. The guy butts in to go, here, I can take that question. We can't talk about that right now.
Yeah, and to your point, the first 5 minutes of the call, Elon was touting about Grok. So like Grok is from XAI, if I'm not mistaken. Second of all, Grok is going to be in Teslas, if I'm not mistaken. So Tesla investors then missed the opportunity to invest at 18 billion, 40 billion, 57 billion, and then 130 billion, and now 200 billion. 5 opportunities that XAI had the opportunity to get a Tesla investment. And one could argue, Tesla shareholders have been very patient with Tesla stock, so being able to get exposure to what could be one of the biggest AI companies in the world. Yeah, this is the forum to discuss that. Or at least it's something where you don't spit in the face of shareholders and you can give a better response than this is not the forum, because obviously Tesla shareholders know that XAI is meaningful. By the way, XAI is taking away the time of Elon Musk, who's the CEO of Tesla. So one would think, hey, maybe as a shareholder, we get a little piece of the pie. I thought that was a bad answer, and I was turned off a lot by that.
But it's also why he's spending so much time there. Someone brought up the question of him having a 13% stake. The truth is he has a major stake in these other companies that he's working hard for, and doesn't have to put up with the earnings calls and all the, he can just get to work. As much as I'm an annoying shareholder, or like I want a certain outcome out of Tesla. It's got to be annoying to have every single person in the world critiquing every single good decision, bad decision. So for XAI, for SpaceX, for Neuralink, all these companies that are a little bit more under wraps, it must be easier to go to work every day. I mean,
I agree.
But
I agree. I will say the stock's down 4% right here. It's to levels we had last week, so it is what it is. But this is also when Tesla runs, right? And this is why this stock is so hard for people to get a grip on. Given everything that has happened this year, you would think this stock is like max 175, 200 if you want to be generous, but no, it's held up. So I think tomorrow when the market opens, investors are going to have to ask themselves, hey, at the end of the day, even if the call sucked, do we believe in Elon's autonomous vision? Because if we do, the street continues to pull forward that growth. I mean, I got a ton of upgrades this morning to 450, 475 from a lot of these analysts. Or was the call that bad? And is the lack of hope, given Elon did say there's going to be 3 crappy quarters due to the regulatory credits going away, enough to take this bad boy back below 250, which is what most people think it probably should be trading at. And time will tell over the next few weeks in terms of what we see on Tesla. Google. So let's start off with you. What were your thoughts on Google? You are a Google shareholder, and I think you like this earnings.
yeah, no, I love this earnings for a multitude of reasons. I mean, mainly because the CapEx spend gets me excited for other positions in my portfolio, like NVIDIA. So that was just insane. But search is staying way ahead of what people thought it was. And it's not just pricing, it's also the amount of clicks that they're actually getting is still up. That was very exciting to know. YouTube is continuously doing well, and cloud is killing it. I mean, I don't know how the market will have to relook at Tesla as earnings or as analyst upgrades come out over the next week or so. And I think they're going to see a flurry of upgrades. A company that has been looked down at as a loser based on artificial intelligence and sort of search dying and everything like this, and just realizing, no, actually, that's not the case at all. And they have no reason to slow down their search growth. I actually think a lot of models are going to come out and show no search declines over the foreseeable future. There's no information that's showing that at all. So,
yeah. That shocked me the most. My thoughts on Google were, to sum it up in one number, 11.7%. I mean, the fact that they almost got to year-over-year levels that were break even with Q2 of 2024, which is 13.4%, when the street thought it would be 8.5 at best. I mean, that's incredible. And it shows that either search is not dead, or if search is starting to lose momentum, Google is figuring out how to pivot search into being monetizable via AI in terms of the different cohorts that they're testing with, and it's producing results and it's producing real revenue. I mean, they did $28 billion in profit. It's just an incredible quarter. I don't think anyone can deny that.
yeah, I mean, they're on track, as Steve would say. You know, he likes talking about the big numbers, but this is a $400 billion revenue a year business coming up. You know, like, this is insane. It's unbelievable. Hard to bet against that. Extremely cheap pricing versus the rest of the Mag 7s. You're getting a company that's in the heart of artificial intelligence, probably has the best way in terms of cost to serve, because they own their own cloud, they own their own distribution, they have some of the best models, the best talent. They should actually be one of the companies that's probably trading a little bit more aggressively, and yet the market is looking at it as the cheapest name and putting Tesla as the most expensive name in the Mag 7. I think that if I was an investor, I did the trade on Tesla over to NVIDIA.
Yeah.
But I think a trade that probably will work out going forward is Tesla to Google as well.
So you think people that are heavy in Tesla should trim and get allocated to Google here instead?
No. I think that people can do whatever they want with their own money, and their time horizons, everything like this are not mine. But for me, going forward with new money, I'm going to be putting it in Google, not in Tesla. So I don't want to tell what other people what to do or anything along those lines, but I'm going to bet on Google here again.
Was there any negative? Was there any negative you saw to Google, or any like nitpicky thing, or you thought everything was pretty good across the board?
I haven't gone through it, all the numbers, because it was just back-to-back calls. What I will want to look into is, net cash provided by like their actual operating activities. Why was that so low? Because that happens before CapEx. I just need to look into some of the margins and stuff like this. I just haven't been able to have a look. And then on the side of that as well, I don't know if you also looked into ServiceNow up 7%. Put that on the stock draft, baby.
Let's open up the stock
I'm telling
draft.
you, my picks, dude, are on fire.
Hold on, let me pull it up. I'm going to be taking
Well,
a
it's not going to
beating.
show you after hours, but
Steve doesn't have a program for after hours?
no.
Okay, so I'll show it tomorrow then in the morning.
Yeah.
Okay, gotcha. The final question, CapEx. I mean, Broadcom and NVIDIA pumped on the increase of 10 billion. I guess that means AI is not going anywhere.
No, CapEx is going to continue to increase. Google up 70% year over year on CapEx spend, and that's going to be higher next quarter and the quarters after that. I mean, this is the people who are saying that they're bearish on AI. I just truly think they don't even know what they're talking about. The entire world is not spending and stealing talent at these 9-figure deals for individual engineers if they are not spending more and believing more that this is the next phase of technology. NVIDIA is going to be a massive winner. I'm not going to discount AMD or Broadcom or any of those guys. They're all going to do great. It's just holy demand. It's insane.
I agree.
I can't get enough, man. I can't get enough.
Well, you've been buying NVIDIA for like 8 years now, so you understand this thesis very well. And it's cool to see it playing out, dude. I mean, NVIDIA to 5 trillion by the end of the year. I don't think it'll get to 200, but if it does, I mean, I don't think anyone can be surprised. So incredible stuff. Tanner, thank you for calling in, and we'll talk later this week.
Yeah, man. Thanks.
Later. All right, folks, that is it for the first day to kick off big tech earnings on Tesla and Google. Tesla now down 4.8% after hours. NVIDIA's up, Broadcom's up. Grabby Grab's up 1.12% after hours, and Google is up about 1.95%. In terms of my personal allocation to Tesla, just because a lot of people are asking why exactly I bought in. So there's a couple of nuances to why I bought in. Number one, it's a very small portion of the portfolio given NVIDIA, Google, Hood, not Google, NVIDIA, Palantir, Hood, and Grab. I'm actually way heavier in Grab than I am in Tesla. Those 4 names have been built out. And because those 4 names are built out, now I feel comfortable with the rest of the money that I can afford to allocate into new names to allocate. Some may argue, well, why don't you just go heavier into NVIDIA or Palantir, Hood, Grab, just because the earnings definitely are going to be better than what we're seeing with Tesla. That's a fair argument. It's just at some point, if I'm bullish on the future of Tesla, I got to buy Tesla, right? And it's like, if those positions are meaningfully built out, and in my perspective, I think they're pretty meaningfully built out. Like, I don't think I have to even touch those names for the next couple of years. I'm buying Grab shares here and there, but I don't think I need to buy more Robinhood unless we get a stupid dip. Palantir has been built out for a while, and then NVIDIA, I think I did a decent job building it out this year. Averages 120 on that. So that is why I'm like, all right, it's time to buy some Tesla, right? Even if Tesla tanks 50% for the rest of the year, I don't think it's going to meaningfully affect the performance of my portfolio given those other names. And I also think if the S&P gets to 7,000 or anywhere near 6,800, 6,900, Tesla will naturally move up with the S&P. Now, if it actually is the outlier against the S&P, that would be something, because that would mean the street has lost full confidence in Tesla. I don't think that would happen, but who knows? Anything is possible. So that's one of the reasons I bought it. Number two, this is one of the big things I said when I wrote up my tweet about buying Tesla. The covered call premiums are so, dude, my mom, who is now an active call seller, I sold, I think, 370 for a couple weeks out. My mom was more bearish. She was like, I don't think it's going to 340. She sold the 340 call for Friday, like in 2 days, collected $800 in premium. Someone out there paid her $800 thinking Tesla was going to pump not only to 340, but 348, right? Because it has to be above the strike price plus the premium you're paying. They basically thought it was going to go to 350. And my mom was like, is the market just going to keep giving me free money? Like, is that what's going on? So she's loving this right now. And my dad sold 345. He was a little bit more conservative, but he's loving this right now as well. I think he picked up like $650. So the covered calls on a name work really well when 2 things happen. Number one, the name is volatile. You need the believers. You need those people that think Elon's going to pump it to 350 and are willing to pay a stupid amount of money to the call sellers. And then number 2, you need the stock to be range bound. The stock stays range. One of the problems with NVIDIA, Hood, and Palantir this year is like, covered calls were working for a couple months and then they just all exploded. And then the covered calls don't work anymore because you're always worried about them going parabolic. Now, maybe covered calls are easier because you could say they're like at a pretty good level where they're not going to go literally parabolic. But in the past couple months, you know, the covered calls got screwed. But Tesla, I mean, if it stays from 280, my prediction is 280 to 350 is kind of that range for the rest of the year. That's an amazing stock to yield premium off of. And that premium also offsets your cost basis. So if you bought at 335, but you collect $8 of premium, your cost basis is now 327. And then if you do it again next week, let's say you collect $5 of premium, you're at 321, right? So as you keep collecting premium that you can use as income, and you don't have to touch the stock, you're down on paper on the stock, but ultimately, you know, you're able to collect that money, and then you can use that money for something else as you build out other positions. So those are the two main reasons I bought Tesla. And the third reason is, like, I do believe in Elon. I know a lot of people don't like him. I know a lot of people don't believe he cares about shareholders and thinks that, you know, he's just using shareholders as, you know, this vehicle to do whatever he needs to do in terms of advancing Tesla's mission, but not caring about the monetary implications on shareholders. I think that's a little misguided, because if you've been in Tesla for the past 15 years, you've done very well. If you've been in for the past 15 weeks, it sucked. And that is not something I can blame Elon about. You know, that is like, hey, I didn't know about Tesla in 2014. If I did, I would, you know, I got a 40x off Tesla, I'd be really happy. But I didn't. And so that means I'm going to have to buy high. I'm not going to be arrogant enough to think the market's going to give me the juiciest price in the world. I don't think we're really going to see this anywhere near that 220, 230 range like we saw back in March. Maybe I'm wrong. Maybe we get there. But if we do, again, the covered call premiums are strong, and the ability to actually build out the position, because that's what I want to do, will be much more lucrative than having to, you know, buy it above that 330 level. So those are my thoughts. Those are my thoughts on it. I would not buy long leaps here. I do think I've been saying if it got to 400 or 450, I think that would be unreasonable. I don't think the numbers are there to justify that. But I think staying in a range of 280 to 350, even though the numbers aren't there to justify that, but I'm not going to be someone who thinks the numbers means the stock has to go down to 100, because that's just not how the market works. I think that's my range. And if that stays in that range for the next couple of months, maybe even next year, based on what Elon said about 2026, then I think that's okay. So the point is, I did not buy Tesla for the stock to go up, which I know is counterintuitive. I know many people are thinking of it like that. I bought it because it is now time to build the position. Quite frankly, if it goes down, that actually helps me build the position. And B, if it doesn't go up, I get to yield the covered call premiums, which is one of the things I want to do, given a lot of these other names I can't write calls on because, you know, it's just hard to yield premium off them, given they are actually executing at a pretty high level and their stocks could go up. Those are my thoughts. Those are my thoughts on Tesla. Grab is going to be a buy and hold. Yes, Grab is also buy and hold. You can't yield premium off Grab because there's not volatility in Grab. There's not enough people buying up all those calls and giving you juicy premiums. But B, Grab, I think, is like intrinsically undervalued. And I think in a year that a year and a half, it gets to $10. And so I'd rather just buy and hold that. So yeah, Tesla's at levels you've not seen since last week. I mean, it is part of the game. It would not surprise me if Tesla's up 5% tomorrow, because, like, you know, Tesla moves up and down, and it is what it is. But ultimately, I think it might be in this range. Now, in terms of the actual earnings itself, we'll go deeper tomorrow on the numbers. Like, the headline numbers are not that amazing, but they're also not unbelievably horrible where their stock should be tanking 40, 50%. It is what it is. They missed on revenue by a couple cents, missed on EPS by a couple cents, missed on revenue by about 20, 30 million bucks, and then gross margin 17.2 versus 16.5. They beat on that. I'm curious about this affordable vehicle. Elon did say, hey, the affordable vehicle is just going to be a smaller version of the Model Y. He said we should let the cat out of the bag. And they let it out of the bag, even though the CFO was trying to say this is not the forum to talk about that. Again, Elon interrupted and finally said, no, it's okay. It's a smaller Model Y. So we did get official confirmation on that. And then B, they said they've started production. Now, I don't know what meaningful levels of production they've started, but hopefully it's enough to the point where the market can believe that the affordable vehicle has a shot of coming out at least at the second half of 2026. And if that's the case, maybe that could be a tailwind on Tesla. Now, I do agree with Tanner. Them advertising to buy a Tesla before the end of the tax credit was a little cringe, yeah, but at the end of the day, they have millions of people listening. I mean, they probably had to say something about the fact that that tax credit was ending. That is bad for Tesla. I would not have my Tesla right now if it wasn't for that $7,500 tax credit, and I would have not bought my dad a Tesla if it was not for that $7,500 tax credit. Like, that really does help offset some of the costs. Tesla also gave me 0% APR when I bought it, right? Like, so that was another reason I got my Tesla. I think without those incentives legally now, based on this big, beautiful bill, that will be a headwind for demand. The question is going to be, can they pivot to autonomy enough by fiscal year 2026 to do that? And Elon said it's going to take until minimum Q3 of 2026, so second half of next year, to even begin thinking of that. He did say it would materially change Tesla's economics to the upside, which in the age of AI, if Tesla was actually growing and it has the cold following, I think the stock would be higher. But until we see that, I think it's accumulation time. I think it's buy it, hold your nose. If you're heavy in Tesla this year, I do feel for you because it has underperformed a lot, part of the market. We do have a lot of months left and who knows what could happen. But this is going to be one of the most important companies in the world. And it already is. It's going to be showing that through its valuation. It's just it needs to get positive earnings growth. And that might take another year, in the words of Elon. And if it does, it is what it is. I think in the meantime, you just buy. And this is why I talk about covered calls. If you really you feel so upset that you have 10,000 shares of Tesla and it's not moving, you can sell a portion of your position in terms of selling the volatility every week and get at least something for having those shares if the stock's not moving. And I think that's one way to kind of navigate being very aggressively positioned towards Tesla. So let's do a poll right here in the chat as we end it out. Again, thank you everybody for being here. Trump also just did his AI summit, so there's a lot of stuff we're going to have to talk about that tomorrow. He did mention Palantir, which I'll show you guys in a second. But tomorrow, here's my question. Tesla recovers or does it dump? Tesla continues dumping. What do you guys think? We also have that big Epstein story, the Epstein files that the Wall Street Journal reported. The White House acknowledged that it's false. We're going to see. By the way, Trump is suing the Dow Jones, which is the parent company of the Wall Street Journal. The Dow Jones president came out today and said, we are ready to take on the lawsuit because we're pretty confident in our reporting. So Trump's suing them for $10 billion based on the Epstein coverage. And the Dow Jones president said, all right, go ahead, sue us. We are ready to defend ourselves because we believe we're correct. So that's going to be a lawsuit that probably lasts for the next couple of years, quite frankly. And I mean, who knows? Who knows? Maybe the Wall Street Journal is right and Trump is lying, or the Wall Street Journal is wrong. But that is a story that doesn't look like it's going away anytime soon. Here's Trump acknowledging Palantir at the DC conference.
Sham Senekar of Palantir. We buy a lot of things from Palantir. Where are you? Are we getting our bills? We just made a deal with.
So you had Trump say we buy a lot of things from Palantir. That was pretty cool. That was pretty cool to see. I think that's also part of the reason why Palantir pumped today, because Palantir was mentioned in regards to some of these new AI action plans that came out from the administration. NVIDIA, Palantir, Amazon, Microsoft, a lot of those guys were mentioned. So that's why I probably got that 3.73% pump. Today, 154.63. After hours, it's down a little bit, 153.92. Tesla down 4.2%, 318. Found a little bit of support, potentially at 314.91, getting some green candles. If it breaks 314.91, then it might have some more pain. NVIDIA right here up 1%. Broadcom up 2.8 off of the Google CapEx news, and then Google up 2%. After hours. I do agree with Tanner. If you do have disposable income and you're not interested in building a Tesla position, I mean, I don't see how you don't buy Google. If you're interested in building out the Tesla position for the long term, then it is what it is. But I don't see how someone looks at Tesla and Google and says, I'm going to buy Tesla over Google outside of wanting to be heavily allocated towards Tesla. I mean, I am not seeing the red flag on these earnings, especially when you look at the operating margins across cloud and the overall business, which we'll go deeper into tomorrow. This was a phenomenal quarter. And if the narrative is AI is killing Google, it's just not true. Not on the numbers. Maybe there's some different numbers, but in these numbers that we all saw today, AI is not killing Google. It is the tailwind. And it only seems like it's going to further be a tailwind going into the latter half of the year, which is going to be the best couple quarters for the entire market, Q3 and Q4, as we get into the holiday season. So yeah, I mean, it's still trading at almost 19 times 2027 earnings. Fair value is probably closer to like 24, 25 times. That gets Google to like 230-ish. So if that's the case, then I think there is some upside there. And I wouldn't be surprised if that one makes a move after hours. NVIDIA right here up about 1%. Tesla down 4%. Broadcom 2.8. And then Palantir down about 0.5% after hours. Hoodie 102.58. That's green a little bit after hours. Was green a little bit during the day. And then you got Palantir 153.98. after hours. All right, folks, that is it. That is it. That is it for today. Ethereum deep dive. We will be doing that at 9:30. So in about 3.5 hours. Sorry, 2.5 hours. So if you care about Ethereum, you care about staking, you care about the treasuries, you care about ETH versus Bitcoin, we're going to have some really fantastic people talking about Ethereum in a couple hours. So 9:30 p.m. Eastern. 9:30 p.m. Eastern. You can translate that to whatever time zone you're in. We'll be live. And hopefully it gives a better understanding to people on why Ethereum is getting this this momentum. All right, that's it. I dressed up for the earnings, dude. I know it would have been more fun if Tesla was going to the moon with this outfit, but I will have to continue. I'm gonna get a black one for a black leather jacket for Jensen. NVIDIA August 27th. So we'll bring some of the same designs and energy and fashion for NVIDIA. And we'll go from there. We'll talk about the other earnings tomorrow as well. ServiceNow, Chipotle. We looked at a little bit at some of their numbers, but on the market open, we'll go deeper into what they reported as well. All right, that's it. This is the first goodbye, right? No, this is the official goodbye. It's been 3 hours. I'll be back in a bit, and then we'll keep going from there. It's earnings. It's what happens. Stocks go up, stocks go down. It is what it is. All we can do as investors is analyze it, and over the long term, hopefully they go in our direction. 67% of you believe that Tesla will continue dumping. All right, that's it. Thank you, everybody. I'll see you guys in a few hours for the Ethereum deep dive. Bye, everybody. Have a good one.